recording, testing. Okay, people online. Screen looks
It's
okay.
amazing.
All right. So
Yeah, exactly. I forgot about it. Like, it's like, did you get a call from Citibank between the year 1995 and 2015? It's like, well, how do I know?
Just check it anyway.
It's unbelievable.
So last week we didn't finish the whole discussion, I guess. It went a little too long, but real quick, I wanted to share with you, like, this would be like Bal's strategy right here, right, where he's shorting stocks like this.
Yeah.
So I like, it's funny, I know how to find them. Like, look at this. This is just insane, right? 34%. So, well, this is 30 million in market cap, so you gotta be really careful. But this is what they play. They basically short these securities all day long. They find securities that run up like crazy and just short them down.
Yeah. I don't know, like I think I said before, but it's pretty overcrowded at this point. Anybody?
Yeah, and like if I were to think from his perspective, right? Because he's pretty capitalistic. Because I kind of studied the guy before, and we're talking about a wealthy guy in San Jose that has a very specific trading style, and he's just playing the same thing over and over.
What's the name?
The name
The guy.
Of the guy.
I don't want to say. It's kind of yeah. I'm recording it as well. So I mean, I don't want to talk smack about people or anything. But I mean, this market landscape, right? The nature of it, it's so tiny in market cap that they need more players to play it.
Yeah.
So I mean, if they're really good at it and it's a small space and they get more people to play it, then it's kind of like they're making money from their.
Yeah,
you know what I mean? That might be something that I'm sniffing out, like if I could, because when the stocks that we look at, something like a Disney is so big that,
it doesn't matter how much money you pour.
yeah, like this is like real like investor art science stuff, right? For that, I feel like I see what you're doing, man. Like, you know, if I was playing a dying market landscape or tiny market landscape, I'd probably want a bunch of newbies to follow me, so that when I say, hey, I'm buying this penny stock. You know.
It's like when Bryce popping up though.
Yeah. So.
It's like Don't Kill Joe.
Yeah, it's like dumping up basically.
Don't Kill Joe.
Yeah.
There was a guy, I guess, in Tokyo who did the same thing, and he went by the nickname Don't Kill Joe.
Oh, okay. I mean, there was what was that one guy in Europe who lost $1 billion in one day? The trader that lost $1 billion. Trader.
Yeah, I think I read that too. Yeah.
How many billions he won? He earned before getting that.
Biggest loss, let's see. The biggest loss was by that one guy. Let's see, or maybe it's not. What was the amount? Equivalent USD loss. Really, there's a 9 billion loss? I know there's one guy who lost $1 billion.
In one day.
I forgot how long the duration was, but yeah, there are some big bettors out there, and this was institution money, right? It wasn't like.
Oh, he lost $1 billion of a client of his portfolio.
Of the bank's money.
Oh, sure.
Yeah. I mean, that makes sense, right?
Well, wait, if you're managing an account with $100 billion and it goes down 1%, there's $1 billion, right?
Yeah.
So I mean.
So I'm just gonna kind of finish off what I was discussing with Aaron before coming in today. So he met with like other groups of like investors and traders out there, and we were just kind of discussing about their personality type and ambition as well. We were just saying how like these guys, they focus on a very niche style of trading, and it's focused on penny stocks, and they just trade that segment all day long.
Right.
And then we were kind of comparing and contrasting the difference between like what I do over here, and I just want to be clear with you guys, like this is to me more of like a educational investment club.
Yeah.
Where I just personally, for me, I like the art of analyzing equity research basically, and just getting really good at the analysis and investing my money. Not so much playing these esoteric market cap groups where you could scam each other easily. I don't know, but that is an interesting segment. If I started my own hedge fund, I'd probably allocate some funds to play that.
Yeah.
Since I could pick them up like every day, right? Like. This list could be endless, like if I keep looking. So the group, what they do is they basically short penny stocks, and you could detect that by just running a scanner in the microcap space. So here's an example. Something overextended like this over 3 days, they'll just short this down. And they'll play for like 10, 15, 20, 30 cents, maybe $1 sometimes.
That plays for like 5 or 10 cents.
5 or 10 cents? Yeah, so they'll bet like, I don't know,
But he plays
50,000
big.
shares.
Plays a
Yeah,
lot of
but
shares.
look at the volume of those stocks.
Yeah, exactly.
Yeah,
So
that's the idea.
that's the idea, right? So you because they're penny stocks, you could size up a lot more. I don't play this style. I'm more of my style is more like momentum stocks and like developing an investment thesis and then holding longer. So something like silver, right? Silver, I have a lot of contracts in. But yeah, I mean that's the contrast right there. Anyways, guys, thanks for coming out to let's see, technical discussion number 133. Before I start, I wanted to finish up last week's discussion because we didn't quite cover everything. But before I start, did you guys have any questions or want me to talk about anything right now? No, same old. Okay. Let's see. Last week, where was I? I didn't get a chance to talk about the stock, so I think I ended right here. So there's this one security right here, so ENPH. So this was a security that Lalit mentioned that it looked pretty good. I did like it as well at one point because I was just kind of feeling out like, why is the security going up? Looking at the technical analysis, the fundamental analysis. The technicals clearly tell me that this is extremely bullish. If I were to perform light technical analysis on it for you guys, I'll show you real quick. We have a gap right here, gap up. Typically after a gap, you'll get some move like this, and then this is a retracement, right? So I see a 100% retracement right there, and now it's holding there as support. So typically I would probably place something like that for like a stock that I really like. So let's say something like a MongoDB. It gaps up, creates that gap, retrace the gap, and then it shows a support right here. I'll continue to play that with some calls. So that's more of my style compared to playing penny stocks, which is completely different. I probably could play it too, but I don't know. I don't see the deep intellectual aspect of it, but I could be deeply wrong. I gotta jump back into it one day. So the technicals to me look really good. It's still looking bullish. I remember we were looking at the fundamentals, right? And I couldn't quite tell, like, why is this security trading at 8 times, or 26 times the book value of the company, as well as 343. So I came to a conclusion that they have some sort of a monopoly on the market, right? They have a strong product that no one else has. So recently, Citron Research, he's famous for being a short seller. He released a report saying that, well, this is no longer the case. There's going to be a big major player coming in and it's going to steal their market share. So the reason why I think this is a good example of just educational use case is that you look at the charts tell you it's bullish, and then you look at the financials or the fundamentals, and the fundamentals tell you that, this is relatively overpriced. Why is the market pricing it so high? And it's only 3.31 billion. Well, then that's where you kind of have to check, use your checklist and say, okay, it's probably the product, it's probably the management, it's probably some distressed situation and they're going through a mergers and acquisition or whichever. But that's how you narrow down like the logic behind why a security is going up. Any questions on that, the technicals? Or I did like a quick daily chart technical analysis of what I saw, and then some fundamental analysis over here. Going to the report that was released, right? Oh, not right here. It was this one. Let's see. So this guy, if you guys know, it's Citron Research. You guys could look up his website as well. I'll show you. He's known to be a pretty. Now this is a true short seller in my opinion, versus those other guys. So this is his website right here. He's the guy who would go. I honestly don't know how much he would bet, but he'll bet a couple million and hold it over a period of time because they're an actual professional fund that trades this. So again, you see the contrast of like the type of people I look up to versus like the type of groups out there, right? Both groups make money, but depends on which one you want to hang out with. So he released a report on ENPH, and I did a little bit of research. So I just wanted to share this just because we spoke about the security. So Citron reports on Enphase and Solar Edge. Generac has just crashed their honeymoon. So Generac is a new player coming into the marketplace that's going to put a lot of pressure on this overvalued security. So what do we know about the security? It's overvalued fundamentally. The charts look bullish. So we'll wait until the charts look bearish to play the negative fundamentals. Now on top of that, the competitive landscape, there's another player coming in. So that's creating pressure. And this player has a track record of success. Again, I'm just kind of going back on the notes from last week. It's kind of hard to remember, but yeah, anyways. ENPH, to trade down to $7. So this is opportunity to trade on the short side. This one's currently trading at 27. So he anticipates a downside of $20.
Wow.
right? Let's see, I mean, you want to know why, right? Shorting shares of ENPH and SEDG gives investors the asymmetric advantage in this disruption. Let me close out some windows right here. Because I know we don't normally look at short selling, but this looks like I mean, it still looks very bullish, but he feels that this is a strong opportunity for a short sale. Would you guys consider shorting?
Yes.
You would?
Yeah, looks more like a cup and handle still right now.
I mean, you're looking at the weekly or monthly or daily?
No, the previous one.
The daily?
No, the weekly.
Weekly, cup and handle. I don't quite see the cup and handle. I see the the sharp sell-off right here on high volume, and then the quick retrace, sort of like a V bottom right here. I think it could retrace a little bit higher and then maybe find resistance at 30. But if this is the case, this is something that's trading very fundamentally heavy. Price to book 26, price to earnings 343, and a big competitor coming in.
The reason is because the earnings growth. Look, they're forecasting a fourfold increase in earnings, so people are speculating if they reach that, that stock will be 50% higher.
Right, so I mean, even if it was like profitable, more profitable, right? Well, it is profitable, but
Well, they're looking at EPS of 25 cents versus 8.
right.
So if they hit that target, that stock goes back up to 25, 30.
Yeah. So
Sorry, 35.
I mean, I personally wouldn't. Well, okay. Looking at the technicals, I would play this still on the long side, but it's just not the type of criteria that I would normally play. Right. I'm more of a software guy. But anyways,
So this is short float is 11, more than, like close to 12%. 11.56% is what it's showing.
yeah. So not a lot of people are shorting it. It's like about 11% of the shares float. So there's shares outstanding, and then there's the shares that you could trade for.
Yeah,
Hmm.
but 12% itself can create a short squeeze for some.
It could. It could. I mean, this is about $3 billion, so I could see why he's betting it down to down to $7. So a $20 move to the downside. So I respect the guy, and I probably would want to play this on the short side. I see the fundamentals look pretty bad. The chart still looks strong, so that's my indication of when to play it. So I'll be looking at put options on this if they have it. So it is optionable. So I would look for a break of like 20 or a retracement back to 30, and then it acts as resistance to consider some put options on it. But that's how I would play it. Even if it goes to 35, then I'll try again there. Right? If 30 doesn't work out, then I'll stop out. So that's an example of like a risk-reward trade. I don't know if you guys need me to draw you the risk-reward. Again, we're just kind of going over, hey Steve, we're just going over what we talked about last week. So let's say this is your risk right here, right? And then potential reward is down here to $7, right? And if it goes up here, then you could try again at 35 and then set another risk right here. So that's the trade idea on that one. Reading a little bit more, assuming multiple normalization and growth rate pressure as competition enters the market, we believe SEDG is worth $51 to $52. That's a different security, I'm sorry. ENPH is worth $6 to $7, minus 70 to 75% from current over the next 6 to 18 months. Long-term downside for SEDG is 55%, and then ENPH is 80%. So what's the reason, right? So there's this other player coming in. It's called Generac. Generac is another publicly traded company. I'll show you the size relative to this. Let's see. So this is Generac right here. So they're worth about the same. Generac Holdings, hold on, let me double check. Yeah, so Generac Holdings, and they're more profitable. They're less overvalued. They're coming into the same market landscape. Their technicals look very bullish as well. But just finishing this out right here. In an unsuspecting turn of events, just last week, gone unnoticed by Wall Street's solar analysts, an even more credible threat than Huawei, with a major product launch planned for September 23rd, will upset the two-player U.S. residential inverter market. Citron will now show the largely unnoticed product from Generac's Investor Day and how they will be able to disrupt the marketplace. Generac is a $5 billion market cap company, best known for almost single-handedly creating the billion-dollar home standby backup generator market in the U.S. They operate an omni-channel commercial strategy with presence in retailers like the Home Depot and Lowe's. Third-party wholesale distribution in a network of 6,100 independent dealers, installers, and electricians across the U.S. So if it's anything that you learn in this investment club, right, a great business is built off of not just a product, but also partnership networks as well as clientele networks and so forth. So this is a big player coming in to challenge a heavy player called ENP, or ticker symbol ENPH. Conclusion, Citron could have easily written a story talking about potential trade war tensions easing, or the widely known fact of pull forward a product to take advantage of a short-term tax credit, but all that is minimal when the space gets disrupted by a player like Generac. We know this movie. We know how this movie ends. The solar industry has seen it over and over in every cycle. Pricing goes lower as competition gets more intense, and shareholders who blindly chase stock price suffers. This one is too obvious, he feels. So if you're still watching that one, I say be careful. I just figure, it's right to let you guys know that a famous short seller is considering the security on the short side. For those who are not in position, hey, this might be an opportunity. I'm looking at it too. But I want to see some chart breakdowns. I want to see maybe something like, well, Salesforce kind of recovered. But you see the difference between this chart, right? Like this would be a breakdown over here versus like a chart like this. You can see that it's still very stiff and very strong to the upside. And then a recent first dip right here. Usually a first dip would have a full retracement, and then we'll see if 35 holds, and it could go higher or lower. So what I'm saying is that, what I'm trying to communicate is that the charts to me itself are still very strong. I don't think the markets collectively in this space have recognized the competition that's coming in, but this is something that's in development.
And they're not going to launch tomorrow.
Did you already look at that, or?
No, you just said that. September 23rd. The announcement was they're going to make that.
Yeah, so this was last week's note, so yeah, you're right. Yeah, so that's a little update on ENPH for those of you who are watching. You could go on to Citron Research and read it as well. Let's see, what else did we not finish in this space? Do you guys find the topic of uranium interesting? Because that was one of the investment theses that we developed a while back, and I'm pretty bullish on uranium. It's just a matter of are we going to devalue the dollar or not, right? And so last week I had this up because I wanted to review a few securities. So CCJ, let me know if you don't like the topic. We could go to the next one, but I'm just going to go over CCJ. Let's see. So this one, to me, I've identified as like one of the top uranium mining companies out there. You got to be aware though, looking at the monthly, there's like it looks really bad, right? But this is typically the best time for an investor to buy. Let's say we go over here and look at who are the major holders of CCJ. Who trades over here. And then let's see. So this is what I like to do. Total percentage of assets under management. Like who is betting big and bold enough? So there's this fund right here betting 20% of their fund on CCJ. Coppernick Global Investors. They're managing 586 million, and their biggest position is CCJ. Let's see how many shares that is. So not that many. So 10 million shares, worth about 100 million of their portfolio. Right. So what? How do you guys interpret this, or how do you feel about it?
No idea.
No idea, right? Okay, well, so just for those of you who are new, to give you insight into like my style of analysis, right? I always like to primarily start off with the technical analysis just to kind of get a general direction of the charts and see where they're going. I'll give you a little quick end-to-end analysis on CCJ real quick. So I start off with the daily chart. This is my daily. And the first thing I normally look at is the 200-day moving average. Is it above the 200-day moving average or below? If it's below, then the tendency is it's in a downtrend. At least the long term says that it's in a downtrend. And so it will test other trend lines that I'd be looking at. So something like the 50-day moving average, which it is above. So it's showing me that there is some form of correction that wants to go higher. We do have a seat over here. If you, okay, yeah, that works as well. Yeah, you're welcome. But yeah, just trying to see if there's any bottoming process in sight. So far, not yet for me, but I do know a lot of money managers are bullish on uranium. Let's review some of the investment thesis on uranium, right? So right now there is a national security risk because Russia owns more than 60% of the uranium mining process. So if the USA, most of the USA imports their uranium about 90%. So everything that we import, we have to process. It has to go through Russia, and we have like trade tensions. Then that gets even worse. So the thesis is that the U.S. This has been brought up to President Trump's attention, And what they're going to do is they're going to start adding tailwind or subsidizing these uranium refining companies. So this is where, as investors, we're looking at a beat down security, something like CCJ, and anticipating opportunity that's ahead. Stack that with the global macro, with the potential of a recession, a lower dollar. That's just a prime environment for commodities. So this is why I'm looking at it now. But again, you have to use timing to not lose your money in the short run. But if you're disciplined and willing to hold for a long run, I think uranium has a strong potential upside. So CCJ, and that's why we're looking at other funds, right, to see who else has high conviction in betting all their money to make this trade work. So this owns 3%. This one owns 6%. But some of my favorite investors are in this one as well. But that's part of the due diligence. Let's see. So that's the technicals, guys. It's still in a downtrend. Looking over at fundamentals. So how pricey is this security? Is it profitable? It's a little bit profitable. It's trading at book value. You guys understand what book value at this point? No? I saw you shake your head. So book value is basically if you take away all the assets minus the liabilities, you have the net equity value. That's what I use for book value, or that's what people use for book value. Basically the price of the enterprise, right? So sometimes when we're looking at our gold securities, we'll see securities that are trading at, I don't know, 0.6. At one point, the security AGI was trading at 0.6, but now it's probably at right at book value. So this is at 0.96. So this was one of the plays that we had in the past for gold. Yeah. Okay. You guys are a little, what?
Book value is good.
For what, CCJ? It's right at its value, right? So in this market, you probably won't get that.
Okay.
Yeah, because everything in this market right now is kind of overvalued. You just kind of have to understand the landscape. Okay, anyways, let's go to the next one. You have a question?
For gold, I know there's like gold miners, and then you can also buy like a gold depository.
Okay.
I was wondering if
Sure.
you consider this similar dynamic for uranium. I don't know if there is like a uranium depository. Just hold uranium.
So I don't know about that one, right? And uranium doesn't have futures, active futures that are traded. It's kind of like traded, like if you wanted to know uranium prices, you would have to go to like a uranium consultant, right? And so CCJ themselves, well, they're a refining company, but there's also a consulting company that will follow all the transactions out there and kind of share or consult on prices. When you ask about, like, you want to own physical uranium?
Or I'm just wondering about other ways of getting uranium exposure.
Sure.
Besides owning the refinery.
You know, personally for me, I'm more of an equity investor. I think equities, especially with options, are the best way to get exposure.
So
right?
there's no equivalent GLD.
Yeah, there is. URA, if I recall. Let me see. URA.
Well, that would be the answer, though, right?
Is that what he's asking for?
Well,
Okay.
like, you wanna have,
You're talking about like a fund, right? Or
yeah, considering holding uranium versus.
Sure. So yeah, this would be one right here, URA. But make sure you kind of understand where it's at, right? If you guys want to see my uranium portfolio.
So is that equivalent to GLD, like in terms of?
Yeah, it is. But I would probably go for the miners because there's more leverage, right? If you go for the I don't know if that one's a miner or a commodity, but that's just one of the ETFs that I know out there. So this is my list for uranium securities. Sorry, I was gonna burp. So, you know, a little side note here. So, you know, this week this week was kind of like a sideways week for me. I mean, I ended up with the week in green for gold. But I did a lot of gold shopping, but not in a sense from a gold miner security shopping. I don't know if you guys are interested in this, but you're into gold?
Yeah.
So this week I actually went out and bought some like real physical gold. Okay, so yeah. So question to you guys: have you guys ever like actually held gold in your hands, like a good amount of chunk?
Yeah.
So I mean, I've held like jewelry, right? But I've never actually held like a solid amount of gold, and so
The biscuit?
the biscuit, the bar, right? So this week I had a chance to actually hold a bar of gold, and I just like, I don't know, suddenly like the 6,000 year man obsession of like, you know, killing and living for gold kind of came out. I was just like, you know, the emotions came out. I guess the peg leg came out, the hook, cash, right? I was like, oh my God, it felt really, I don't know. It was a feeling that I didn't really feel in a while, I'd say, because it's just someone who studies like the history of gold, the transaction, how if you study the concept of trust and all that, super duper inspiring. So if you guys are interested in gold, I'll share with you some of the things I bought. It was actually jewelry.
Just curious, how do you store your gold? Do you
Uh,
bury it underground?
I don't have that much gold, okay? I mean, I'm looking at gold jewelry, but
Don't let your wife go near it.
yeah. Okay, it was AMP exchange.
Is there the same emotion if you don't believe on gold?
If it's what?
If you don't believe on gold, do you have same emotion you would be feeling?
Could you repeat that? If I didn't believe in gold, would I have the same feeling, right?
Yeah.
I think now more than ever, especially in this investment club, we talk about a lot about the global macro situation, sovereign debt, the government debt, the printing of money, and the decay of trust and all that. I think trust is like so foundation to human nature or humans that I'm a big believer of gold. But you're right. If I wasn't a believer of gold, I wouldn't be looking at all this stuff. So what I bought this week was, this is what I bought online. I bought some PAMP Swiss gold. There's actually, a really cool concept behind this. I don't know if you guys ever seen this, but so I was just reading the history. So this is something I geeked out. I'm digressing a little bit from investments, but I would argue that this is still investments, right? We're talking about gold. So this is a gold bar, 2.5 grams. I bought this one because you could wear it as a necklace, right? It's kind of cute because it's like the size of your thumb. And you're carrying gold around. This is by a Swiss, it's not by Credit Suisse, but it's by PAMP Suisse. But what they have engraved on there is this goddess called Lady Fortuna, which is like the goddess of luck, fortune, prosperity.
Cool.
And the story of her is like she's blindfolded because the people who worship her, she doesn't want to have any bias, so she's like, and I just like thought like, wow, this is like real investor grade type of jewelry. So I ended up buying some jewelry this week. I bought a chain and all that. I like I said, it's just like studying gold. It brought the emotions out. If you guys are interested in that, they also have this one as well. This one is the PAMP Swiss. Was it? Well, it's called Rose, but I could have sworn they called it Rosa. So
The Canadian gold.
very nice, right? Say again?
The Canadian gold maple leaf's a real pretty coin. It's expensive though, but that's a nice one.
Oh, you're talking about for pendants? So a little bit of a digress, right, guys?
Coin.
You could also buy a coin and then buy a bezel and put it on. But it's like, okay, this one's a little bit bigger. This one's 5 grams. So the one I bought is actually half of the size. But it's pretty nice. It's like, it's meaningful. Okay, so this is the 1 gram. Yeah. So they got lady sizes too. Okay, so, huh?
5 grams and
Wait.
5 grams, if you always bend your head to your wife.
Yeah. Well, I mean, sorry. I'm trying to mute someone online. It's like they're going on and off. Sylvia.
Yeah.
Wait, Sylvia, are you trying to say something?
Yeah, I mean, gold is so expensive now. Why are you buying it now? I don't understand.
Well, so I think the best way to look at it is, why am I buying the securities? Right, I'm bullish on gold. So if you look at the monthly chart on gold right here, if I do a quick technical analysis, I think with the whole situation this week, if you follow the financial markets, we have the whole repo market situation.
Oh, the 10% overnight rate?
Yeah. And then they actually had to print more money. So I'll show you guys some charts today how the balance sheet actually went back up. But to answer Sylvia's question, we're in a bull market, 6-year high for gold. And it's funny because when I was buying it, right, I bought it on one of the days and gold was going up, and then I ended up paying more at the end of the day because they were based off of spot prices. So
you're basically paying $289 for a coin that by this device instrument worth like about $250. So you're paying about 10% over for the prettiness of the value of that gold.
Sure.
That's how to look at it.
yeah,
Which is a good deal.
it's just for jewelry, right?
Yeah, of course.
Yeah.
It's great.
Now I also went to the mall just to kind of see like what type of prices are these guys charging. I can't remember exactly, but when I was calculating the numbers, like okay, this is how many grams of gold, and it came out to be like $3,000, right, for this piece of gold. I'm like, but you're charging me $6,000. And then the guy goes, well, there's all these, margin costs. You gotta hire people, the real estate expenses and all that. But $3,000 on top of that? That sounds like a bit much. So Sylvia, I am bullish on gold. You have a question?
Yeah, just similar to last time. Like, what would you say about owning physical gold versus a gold miner? And then also, what about like silver? Because I know silver to gold ratio, that's been
Yeah, it's
at
about
a
88.
historical low.
Yeah.
Yeah.
So I have a lot of contracts in silver right now. So I don't know if you trade options, but I trade options on. Yeah, so I got about the equivalent of about 10,000 shares in silver, right?
Oh, wow.
For,
Okay.
in options. So I'm bullish on silver as well. I think silver has a lot of upside. That's one of my bigger positions. But what do I think about in terms of like holding physical? The physical is really just for a hobby, a leisure, in my opinion. Now, if you're like someone of like serious net worth, then I guess you would kind of diversify into like fine art or exotic stuff, right? But for me, it's just really a leisure thing. Now, for investment-wise, gold or gold miners, I prefer gold miners because there's a lot more leverage. But
It's also like the future almost.
Uh,
Because it's based on the future price of gold.
Yes, it is. It is. So I'm bullish on gold, right? So on top of that, so gold miners, I stack it with options. So there's a lot of leverage in between. Yeah. So that's my take on it. So from
So it's high
an investor,
conviction.
yeah, high conviction from an investor perspective, as well as building your network perspective. I'd say go with the investing, right? But if you have like, I guess, discretionary funds that you don't want to go buy more clothes with, or watches, or a laptop, or whatever, then yeah, you go buy some gold. I mean, it's definitely this investment club has really shaped my belief system of trust, money, human history. So it's becoming a lot more meaningful to me, and so it really has my affinity, I'd say. All right, I mean, go out there and hold a big chunk of gold, and tell me that you had no emotions about it. So then that's how you kind of know. So maybe I got sold on it by just holding it this week. Do you have a question?
For the silver contracts, do you sell put or you buy call?
I bought calls. The calls on the this. So I don't have my TD Ameritrade. The silver calls 2 years out is actually really cheap right now. It's just like $200 a contract.
How far?
$200 a contract.
How far?
2 years out. That's pretty good, right? 21. So I filled up this week, and if it doesn't work out, then I'll shave the position down. But I'm pretty bullish on silver.
Right then.
What's my strike? I always do at the money or in the money. I never do out of the money. Yeah. So I mean, I sold somewhere here, right? We've been in position since November, and I traded around here as well. So I sold out recently, but now I'm getting back in. So I'm just trying to optimize my position on silver.
Nice, you sold out on the spike.
Uh,
Sounds like.
Yeah, I mean, for me, it's kind of like the same thing over and over. I'm really watching. It's kind of like trading the Bollinger Bands, right? But I'm looking at the 20-day moving average. When it spiked right here, it was just way too far from the 20-day moving average. So I just knew that somewhere here I had to take some, and I take some on the way up, right? Normally, why would it spike like this? Because everybody wants to get in, but it's going to retrace because you gave people some fast wealth in the short run, right? So these traders are going to trade it out, but secular trend wise, I think we just kickstarted a bull market, and I know it's your first time, right? So you kind of missed out on like all the other discussions that we talk about, global macro, the situation, the aging demographics of the world, and the changing.
There's going to be a debt crisis. It's going to undermine confidence in fiat.
Yeah,
And
yeah.
that's the bull case for precious metals.
Yeah, pretty much.
And
And I also observed like serious investment funds out there that own a lot of gold, right? One of the funds out there is this one called Tocqueville. Let's see. I'm sorry, guys. We are kind of going everywhere from what we were going to discuss, which was uranium. But that was from last week's topic. But this is a fund out there that I highly respect, right? And I think they're managing more than 100 million. I'll show you what they're holding, and you're going to be surprised. Like they are, if anything, Aaron, these are the guys I respect. Go to their portfolio right here, Tocqueville Asset Management, and then if you look at just look at the team real quick, who we are, our team. So these are the guys who are buying gold, okay? Just show you their profiles real quick. They're all CFAs, right? These are the guys. Take a quick glance at what they look like and how much they're managing. So they're managing about $7 billion. Right? And if you go to their current portfolio and look at what are they holding, wait, what? Come on, man. Let's see. The shares out there, right? I like to look at the shares, but we also look at the value as well. You're going to see that they're holding quite a bit of oil and gas. Oil and gas has a lot of value right now, and also metals. So commodities and gold. And then they also have this one. Isn't this interesting? This is one of my favorites right here. Cloudera, huh? Yeah. Okay. Let's filter it out. Let's look at basic materials, right? Because I just want to actually let's hold that back and look at their portfolio real quick from sector weightings. So again, these are the guys who are managing $7 billion. Oh, sorry guys. This is like a weekly thing. This security thing comes on whenever I'm teaching. Sorry about that. So yeah, if you pull out the portfolio right here and just look at the sectors, the weighting of it, right? What's the biggest chunk in there? It's the salmon color, right? Basic materials, right? So they're 7 billion, most heavy in basic materials. So we'll jump into the portfolio and filter out everything that's basic materials and look at the best, or the highest conviction. The highest conviction is this Jaguar mining company, right? But this is all gold, and I have BTG as well. I have calls on this one. What else do I have? I have OBNFF. That's one of my favorites. I am gold. I have some calls on this one as well. Let's see, Corvus. I've been looking at. This is their new holding, but you see the conviction that they have. Let's go to value. Let's switch it over to the value, besides shares.
What is the expense ratio in this fund?
That I don't know because I'm not looking at investing in them. I'm looking at where are they holding it and just re-engineering my own portfolio for my own profile, right? So from a value perspective, they got some silver in here. So MAG is their favorite silver, but I wouldn't be surprised if they had PAS as well. This is PAS right here. This is one of our favorites, PAAS. So, I mean, what do you guys think? This is their biggest value position right here for gold. So their highest conviction is this company, DRGDF or FNB or MAG.
You also have AGI and AU.
Yeah, AGI is my favorite. AU, yes. AU is African jurisdiction, if I recall. So I'm focusing on like USA, Canada jurisdiction. Newmont's really good. NG's in here is really good. So yeah, this is the serious portfolio right here. So you could just learn a world of knowledge just by diving deep into a $7 billion fund, right? And you could read up these guys. They're basically, their insights are really good.
We need that crystal ball. If you thought that October through December this year coming up was going to be a disaster, that's the kind of fund that you want to own.
I think so. Okay, so moving forward, right, with the repo situation and the whole attack, I think volatility is kind of sneaking into the markets, right? It's that September, markets are at all-time highs almost, like 1% away from all-time highs. Yeah, I'm feeling comfortable positioning back in gold, silver, and even some Bitcoin. Bitcoin's another story.
Yeah,
like you said, undermining fiat, right?
Right. Money has two purposes: store value and also as a medium of exchange.
Yeah.
And crypto is perhaps the best medium of exchange.
Yeah.
Especially if you're like a Chinese billionaire trying to move your funds out of the country. They have capital controls.
Yeah.
That was a big deal in their rise up to 20,000 for Bitcoin.
Right.
And I think as we go forward with when the recession comes worldwide, you're going to start seeing countries across the world enact capital controls, just like China, not nearly to the same degree, but more like soft capital controls.
Yeah.
And that's when crypto, I think, will really shine.
I think what we talked a lot about in this investment club, guys, is something called basically late stage capitalism. Yeah, you guys know what that means? Late stage capitalism. I always use, you probably already know it because I use the example of the Monopoly board, right? Where we played a Monopoly game and we just never end the game when it needs to end. Because, maybe fourth quarter in the game, it's already defined who the winners are, but the game doesn't reset. Instead, you're asking all the little nephews and nieces to keep playing, right? To really satisfy the pleasures of the winner and the pains of the loser. So, we are in a late stage capitalism, essentially, where resources are just like to a point where this is the wealthy and then the not so wealthy, but then you also have the introduction of technology that's going to create further wealth inequality, right? But that movement of wealth inequality is also opportunity to investors who don't have a position or don't have wealth. It's an opportunity to build wealth if you know that there's going to be this wealth inequality expansion. So that's why I'm hyper focused on like Silicon Valley and like AI startups and all that, or software securities, because those are the companies that I believe are going to be the companies of tomorrow as we transition away from. I mean, it's still services, but it's software. Like away from products to services, to away from services to software. I don't even know if that makes sense, but yeah. I mean, if you look at this chart, I always think of like 2008 or like the .com, right? Whenever people first discover like, oh, .com, and then the explosive nature, and then it's like fast wealth in a short period of time, and then it corrects, everyone sells out, but it's still holding up today. So this is the price of Bitcoin. And Bitcoin from a monthly or weekly perspective, since we're on this topic already, it's sort of tightening up right here. So it's looking pretty good to me. If it tightens up and it goes up higher like that, then I think chances of prices coming back are going to be pretty slim. And so again, going back to reasons why I'm bullish on Bitcoin is the whole aging demographics, right? Generation Z using their mobile phones, touchscreen mobile phones for the first time. You know, also millennials needing upside in something, whatever. Technological advancements, mathematically bullish because there's a limited amount of Bitcoin units out there. So again, I won't bore you guys with the same investment thesis over and over, but I want to take the risks and I want to play it. If not, then I have some gold jewelry at home to be happy with. Okay.
Well, okay, on that note.
Yeah.
So you bought a physical item worth $280.
Well, I bought a little bit more than that.
But let's just say
But
that,
yeah.
so you get the benefit of wearing it.
Sure.
So you get the physical, wow, this is cool. So you paid $30.
Yeah, it's just
for
an
that.
emotional like
Exactly.
need.
So you're winning because you feel good.
Sure.
As simple as
Sure,
that.
sure. But if I want to be, okay, you know what's funny about life, guys? Like the more we talk about money in here, right? The more I realize like we're not really chasing money. Can anyone debate with me? Like we're not really chasing money. In life, I was telling the gentleman over here that we're just chasing a standard deviation. You know, we're just we're trying to be 2 or 3 standard deviations out. That's what we're really chasing at the end of the day. 3%. Right? Like, if everyone had $100 million, you're not chasing money. You want to be, 3 standard deviations ahead or whatever. That's really what we're chasing. It's a ranking system, right? That's what I've come to conclusion about. Okay,
it's
well.
kind of depressing because that means there's got to be a ton of losers for every winner.
That's the bell curve,
3
right?
standard deviations
Yeah.
It's up there.
Yeah, so teaching investing has matured my thinking a lot. I mean, I'm buying gold, right? So one of these days, I tend to do like 100 years of like analysis, but I do feel ambitious to do like 5,000 years of analysis one of these days, just to kind of study like economic bubbles of the past, because it's so weird that if you glance at it a little bit, we're doing the same thing over and over. Right? Remember how I said there's only every 100 years on this planet, it's a different set of people? Well, we're just like repeating the same thing over and over. And history kind of tells it all, which is deeply fascinating. Ashish, do you want a stool? Or okay, I'm going to move relatively quickly here. I do want to share with you guys the uranium portfolio that we put off for a very long time. I do apologize. You use another one. It has a rounded bottom right here. UEC, another one, okay? DNN, again, these are just another one that I'm looking at. And I would encourage that you go and look at their market cap. Just see the size that you're playing, because they're really small. If they're really small, they're going to be very volatile, to the upside as well to the downside. Last week, we were going to talk about Cloudflare, right, the IPO. So I'm going to talk about this a little bit. Did you have specific questions you want to ask me about it? Or you want me to just kind of give you my overview of it?
Yeah, it's just give us their overview.
Sure. So I guess one thing that when you guys are investing out there, and this is what I notice, is when you're investing into a new IPO stock, get out of the mentality that it's a deal, it's for me. That's like the wrong way to think about it. Okay. Another one is don't wait until I'm gonna wait until the grand opening to start something. Okay, and I'll tell you why. If you're going to wait for that grand opening, that perfect moment, it's very selfish because the market's are moving in real time, right? Every day someone's born, someone's dying, someone's graduating, someone's starting a career, whichever. The markets are always moving, so there's no perfect timing. You just got to do it right now. So that's a little tip on that. But anyways, going back to the IPO. Yeah, this one IPO recently. It's a leader, but I think it's slightly overvalued as well. It's valued at $5 billion. I don't have the price. Let me see if I have it over here. Is it a net? Yes. So price of sales is about 23, which is about market price for this. Slightly higher. I don't like it at that price. I like the company. So how do we play this? Well, you probably would watch earnings and look at sales. If sales starts growing, then this PS ratio starts going down, right? Assuming the stock doesn't go higher. So that's how I'm looking at it from a software perspective. Let's look at the company and what they do and is it valuable or not. It's a web-based web performance and security company that provides online services to protect and accelerate websites online. Let's see. Okay, that's the same thing. And looking at their website as well. I feel kind of bad because we're already like sort of in, and I haven't even started the discussion for today. We're just finishing up from last week. This is their website right here for those of you who don't know. I would encourage you to kind of just, when I'm evaluating stocks beyond just the financials and technicals, I like to look at the website and see like who are their customers, their pricing, how well do they look sharp. Again, these are the customers right here. I see Marketo, I see IBM, I see Thomson Reuters. What else? What's the market opportunity? But most of all, I always scroll down and go to the investor relations. That's where all the information is about the company. We won't go into specifics today, but I'm just showing you the website. I like how it looks. It's clean. Let's see. Our mission, help build a better internet, right? A safer, faster, more reliable internet everywhere from Atlanta, Bogota, I can't pronounce that, Cape Town, and so forth. This is the chart right here, right? But this is from last week, so this is what it looks like today. If you pull up the intraday. Judging from the recent price action, I think it wants to go higher. Yeah, I think it wants to go higher. But it's overvalued. So in a situation, if we get volatility at the macro level, this thing's going to get crushed. That's just something to be aware about. And as of late as well, a lot of software stocks have been getting crushed.
Who's their bigger competition right now?
Who's their biggest competition? You're skipping ahead, but I can show you right now. So competitive landscape, their biggest competitor would be NetScout. Imperva is one, but not as big. Radware, Akamai. Those are pretty big competitors. I mean, Akamai and NetScout, they're here in Silicon Valley. So here's another angle on that analysis, right? The other ones would be AWS. I don't know what this one is. I don't have a name, but Akamai. Oh, that is Cloudflare. I'm sorry. Imperva, AWS, Akamai, Cloudflare. Right? So this is an example of analysis where we do the competitive landscape and just see which players are in the space and how big are they. Here's another one by Gartner. No, this one's Forrester. Akamai is a leader. Imperva, F5 Networks, Radware, Fortinet, and then Cloudflare. Right? The beauty of this as well is that not only do you get to see who are in the competitive landscape, but you also get to see other investment opportunities. Right? So I like Fortinet as well. Fortinet is, if I recall, a profitable software company. FTNT. Let's look at the daily. So, yes, this one's very profitable, right? Solid sales and relatively priced with price of sales at 6. This one looks attractive to me, and it's tightening up right here. So I'm sensing like maybe some fund is positioning in. So I like this one. I've been liking this one, but it's just. The whole environment is just not favoring that right now. If anything, if you want the general theme, the environment right now is favoring value stocks. I think emerging markets kind of developing. It's valuing precious metals like gold and silver, gold miners, and then for value stocks specifically oil and gas. I see a lot of oil and gas buying in like the last several weeks because that's where value's at, and you jump the value because maybe bonds are falling or whichever. Anyways, let's finish this out. And that's pretty, well, no. The investors in this, so Venrock, NEA, New Enterprise Associates, Qualcomm Ventures, Capital G, Microsoft Accelerate maybe, and then Baidu, right? And then looking over at the financials real quick, they're doing about $200 million in sales. At 18 is 5 billion, so okay, I got that. So I'm sorry guys, this is from last week, I'm trying to recall. They have a negative balance sheet, something to be aware of also. But that's the typical IPO that you're getting in this market, right? Just lean software, no earnings, just sales, and no balance sheet value. So as an investor, are you buying that? If you are, I would say trade it because it's not at a valuation where the investment makes sense yet, but sometimes you just gotta pull the trigger, right? Something like a Lyft and Uber are starting to look pretty attractive, and I'm seeing guys like Stanley Druckenmiller take a position in Uber. I know Uber's beat down, it looks attractive to me, but still a hard play. Uber and then Lyft. I like Lyft as well. But you have to have your wrist right here, okay, at 45. Anyways, that's the quick analysis on Cloudflare. Do you have any questions, or wanted to cover that just because you asked earlier?
No, okay.
For the technicals, there's not much that I could do, just because this is all I got, right? So from an intraday perspective, I see someone piling into a position, but not enough information to tell you how much more upside. But I think Monday is going to have momentum to the upside. Just looking at the charts right here, that's my take. Let's see what else. Okay, all right, guys. I'm just gonna finish that part. Well, we didn't talk about Uber last week. Do you guys want to talk about this one? Uber Elevate? Not really? Okay, all right, then let's go into today's discussion. All right, now this is where we really start, all right, guys? Technical discussion number 133. Stock markets, DataDog IPO. That one's a really good one that just IPO, but you gotta understand the valuations. And then we're gonna talk about WeWork and the valuation madness. I think if WeWork really tanks, then I think the economy is gonna feel it because they're kind of global, right? But I always like to start with a quote, and this is something that helped me growing up, so I want to share with you guys. When in doubt, go to the library. And the story for me is, when I was 18, graduating high school, I didn't have any direction or know what I wanted to do with my life, but I just went to the library, and I think it's just go pursue a book, go read a book, and you'll figure things out. I do have several more motivational stuff and things of value that I want to share. So 35 ways to invest in yourself, okay? Number 1, eat healthier. Learn to cook. Don't worry about the opinion. Sleep and wake up early. Stop procrastinating. Manage your time better. Travel more. Stick to a routine. Invest your money. Challenge yourself daily. Spend money on experience. Visualize success. Forgive others. Stop to win approval. Take notes. Listen to podcasts. Learn stuff online. Choose your friends wisely. Read books. Stay in touch with family. Get rid of toxic friends. Start that business. Find a mentor. Learn a language. Set goals. Plan your day and week. Practice meditation. Gratitude. Make a life plan. Exercise. Learn more skills. Start a new hobby. Save this post. Yeah.
It's almost like we're at a secular church where we get a lot of, life advice. On top of the
this start off as like investments, right? But like sometimes it gets dry, so I try to change it up and just share things that I found, things that made me emotionally better every week and keeping me positive. So trying to share the wealth with everyone. Oh, you want to take a picture? Sure. I would also add number 36, like go help people. That one really got me going. Yeah, go help somebody. Go. Number 9 is my favorite right there. Okay, you good to go? Can I go to the next one? I'm not gonna read this. Well, I like this one. This was really good this week. Let's just read this part. Invest in yourself to the point that makes. Sachin said number 37, buy gold. Anyways, invest in yourself to the point that makes someone else want to invest in you. I like that one a lot. And then, this morning I actually got a little inspired. And this lady from Cape Town, she was saying really fascinating stuff. And I just got inspired by it. So I wanted to add a little bit more and share it with you guys. So musings, right? Your diet is not only what you eat, it's what you watch, what you listen, what you read, the people you hang out with, and the things you subject your mind and soul to. Always be mindful of the things you put into your body, emotionally, spiritually, and physically. I can tell you that now more than ever, after learning deeply about money, this little tweet right here just means a lot to me. So I wanted to share that. And then also this one, another one. The path of least resistance always leads to the same destination, the land of mediocrity. Do not fear failure, fear average in the markets as well as in life. So she's also a trader. That's how I came across her. Anyways, this week, guys, I think this week was a pretty active week in terms of like news, right? And it kind of sets up the volatility or the tone for like the next 2 months, let's say, September, October. September is typically the month where there's going to be a lot of volatility. But some of the highlights for this week was basically the WeWork IPO is being postponed. I don't know if you know that story, but that's pretty significant. And this is the other thing as well. Like, ask yourself this honestly: when you go out there, has there been a time anyone in your circle saying, "Hey, like, have you heard of WeWork?" Or like, you know, "Hey, I'm working at WeWork." Has it come across your average, you know, an average daily life? Not at all. So these are indicators that I use personally. So when Bitcoin was at 20,000, I started hearing people that don't normally talk about investments start talking about Bitcoin. So this to me, I'm hearing that at several layers when I'm hanging out, being social. So I feel that WeWork is a bubble, and we're gonna take a look at the S1 today and just kind of understand like this is, you know, if I can't show you where to find upside in investment, at least I can show you where not to find downside, right? So I don't think WeWork is a great investment. Fed FOMC meeting, so you guys know that interest rates are lower. But markets didn't really react the way that you think it would react, right? If you get lower interest rates, then stock prices should go up, gold prices should go up. Well, I watching every FOMC meeting and watching the markets, they never react the way you want it to react. It's always the opposite, and then the next several quarter or a quarter later, it reacts the way you want to see it act, at least mechanically. And then the repo markets, and then the Fed intervention. So I don't know if anyone watched that this week, but their balance sheet got a little bit bigger again.
Quantitative easing.
Yeah,
Yes.
yeah. This was like emergency QE,
Yeah.
right? And now that's that. I like to study that from a perspective of like what their actions and willingness to take in a situation like that. It's kind of like you just tested somebody. You know what I mean? Where I'm trying to think of a test that people would do. Sure, but I would say they tested. They reacted just the way I think they would react it. So now that we know their hand, essentially, if we get any volatility, what they did this week shows that they're going to hold up the stock market. That's my conclusion.
But this was more like a flashback.
In like a money market, like a smaller. That's also pretty serious as well. I take that as like a situation where it could bleed out into the bigger picture, right? Do you have a comment?
Yeah, I think this is just a start. I think going forward, when we really get into the upcoming crisis, we're going to see central banks adopt extremely radical monetary policy that puts quantitative easing to shame.
Yeah.
And when that comes, that's really going to shake the confidence in fiat, and that's when gold, silver, these kind of commodities will really take off.
Yep. So let me forecast you a little bit. So you look like you're more on the younger side, and you also talk about Bitcoin, and you seem to know about monetary policy. So do you work with cryptocurrencies by any chance?
No,
or are you just an enthusiast that reads a lot about?
I'm bullish on cryptocurrency, but I don't want exposure because I don't know which one is going to be the one that's the final form.
Yeah.
So I think gold and silver is much safer at this point.
Sure. You're a millennial,
Yeah.
I'm guessing. How did you come? Not that many millennials come to the conclusion of gold and silver.
Oh.
How did you come to a conclusion? Yeah, I mean, I want to know. I want to know like the derivative of this, right?
Yeah.
So
well,
how did
I'm
you?
like representative of like kind of my generation, I guess.
Sure.
And, I think this just the fiat system. I think going forward, like 200 years from now, they're going to look at our current like monetary system and be like, wow, that was so crazy. That's insane.
Sure.
Kind of like the way we look at like I guess like 10% interest rates 100 years back.
Yeah.
Or dueling. Dueling, people would shoot each other with pistols.
Yeah.
It's like insane. I think they'll look at our fiat system as insane.
Yeah.
That like central bankers would get together and just come up with some policy.
Yep.
They'd see this as really arbitrary, and I'm just not a believer in our current fiat monetary system.
Okay.
I think our current crisis really illustrates like the issues with having central bankers dictate this policy.
Yeah. No, I'm with you 100%. I'm just wondering, why don't you come sooner, man?
Yeah.
Okay, we could chat more. It seems like you you're doing your homework, and that's really good to see. Because
I find this amusing, actually. You use the term current crisis. So you really think there's a crisis
I
in
think
this
there's
world right now?
I think there's a crisis in monetary policy.
What's the crisis?
What
sovereign debt,
Sorry.
sovereign debt crisis,
Yeah, sovereign debt crisis and
monetary
central banks,
architecture decay as well.
Right, they're
Yeah.
artificially holding interest rates down.
Yeah,
This sort
yeah.
of market manipulation, it's not sustainable in the long term.
Yeah,
Especially this extremely radical quantitative easing.
yeah.
But I think it's going to get so much worse.
Yeah.
So much more
Well,
radical.
this is really eye-opening that people think this is a crisis in this time right now, because people don't even know what a crisis is. Okay, if you were to go back into the days of World War II and so on, where there were lineups for food and so on, and people
Yeah.
on the street and so on, that's not even close
Yeah.
to what a crisis is today. People here have more prosperity in their life, in history, in the time of history.
I have a quote. You go bankrupt gradually, and then you go bankrupt suddenly.
Yeah,
I think
but-
that's the issue with this crisis, is that we haven't gotten to the suddenly part. We're still in the gradual part.
Yeah, I know, but I mean, if you use the term crisis, the world is in chaos right now, and it's so
Well,
far from
monetary crisis. I don't think it's like a social crisis, at least not yet.
But you gotta give him some credit, because right now there is 6 million Americans defaulting on their car loan, more than 90 days. There's 7 million they don't have bank accounts, and they don't have $400.
I haven't defaulted on
And
the
if you are
car yet.
involved in Silicon Valley, you don't realize what is the rest of the country.
Yeah.
So you gotta think, this is gonna, eventually it's gonna blow up.
Yeah.
I mean, right now, we just have this,
Yeah.
Think about it this way, basic thing that you need is food.
Mhm.
Food is so cheap today, and no bread line, forget about bread lines. It's less than 10% of your income is what you spend on food. Historically, it's been 40-50% over the last century or something. So coming back to him, it's not a crisis.
I
Well, he's saying monetary crisis, and there is no reason for any country to have negative interest rates. Germany has it, Japan has it, and if you're sticking with monetary crisis, it is a crisis. They don't know how to figure it out, and probably down the line he's going to say how even Fed could not keep his repo rate for the night because federal government is borrowing like hell.
Yeah.
If you borrow money here and put in infrastructure, there is going to be no recession in 100 years. Just borrow the money, put it on infrastructure.
But your currency should reflect the, the weakness. But
The
it is
whole
not,
world-
right
the
now
whole
it is
world
not
is
there.
going down. In that way, you look at
Yeah,
the
so-
whole world is going down.
So because
But-
the whole world is fighting a deflation, so to say, against this the ghost, which is the automation of the job, and when the jobs are disappearing because of the automation.
It's
So.
global economy is getting extremely tight,
Yeah.
and
What I'm arguing is that we never faced in history before this
Yeah,
revolution of automation.
yeah.
So that's why the central banks don't know how to fight it, and they are doing whatever they think is the
Yeah,
right thing.
and-
So this is totally unprecedented, right? Last couple of years in Davos, in Switzerland, World Economic Forum, the focus is fourth industrial revolution. They're concerned by AI, and that's going to replace a lot of jobs. I mean, we're not talking about just blue collar workers, we're talking about white collar workers.
Yes.
Yeah,
So
yeah.
that's why UBI coming in place. So they don't know, they're kind of puzzled. They don't know how they're going to address this massive unemployment.
Yes.
Yeah.
Now, they say 60% of future jobs are not defined yet.
Yeah.
They don't know. So can they fix this through a tax cut? I mean, I don't know.
I-
Tax cut, they should give them a tax incentive to figure out what are the future jobs and train this new generation so they can do the jobs.
Yeah, yeah.
So I think these are all challenges you don't know. I mean, we think, well, the economy is good, Silicon Valley thriving. Of course, I mean, people having, assets, they're gonna do well.
Yeah.
But how about the rest of the world?
Yeah.
You got about 5 billion people who
Yeah.
don't have good jobs, good income. They're living paycheck to paycheck. So how are they gonna survive? So this is a big
Yeah.
problem.
It's a big problem, and maybe it'd be nice to when let's say there's a global crisis, you could say, hey, I got an ounce of gold right here, right, or like a gram. You got something to barter with, right? Because you're gonna revert back to the mean, the primitive mean, which is like bartering, or even ammunition and stuff, right? But that's like I think that's like beyond our. Like I'm look at me. I'm not trained to go to war, man. Come on, I can't. I wasn't born to throw an arrow. All I know how to do is to use a laptop and talk in front of people. So I don't think we're built that way this time around to go to war or anything. It's a serious crisis, or it's a serious bubble in development, and every day there's something that's kind of chipping away at the, the structure, right? So there are structural cracks to be aware of. That's why I'm positioning in gold. And so also this right here, I think what we were just talking about, it comes up perfectly. So GMO, they released this recently, August 31st, 7-year asset class real return forecast. This is a serious forecast, right? And if you look at it, it's like what I said, what we kind of developed. Look at the first one, U.S. large caps. So bigger companies are forecast to do 3%, negative 3%. Small caps, 1%. We're talking about USA small caps. Now, that doesn't mean you can't go find a great Carbon Black, MongoDB, Twilio with a lot of upside. I think they have a lot of upside because this is like software infrastructure that's building the infrastructure landscape for the world of tomorrow. But we're just talking about collectively in general, right? So large international, almost 1%. Small international, 2.5. Look at emerging, 5%. And then emerging value, 10.1%. There's a reason why when I look at Ray Dalio's portfolio today, he's heavily positioned in emerging markets as well as gold. And I want to share with you guys that as well, just to give you some insight. Because you guys know who Ray Dalio at this point is, right? And then for people who just came in, anyone know? Ray Dalio is the guy who, the biggest hedge fund in the world. I'm just going to do it by shares right here. And you see that, look at his positions, emerging market, gold. His biggest gold is IAU in terms of shares. And then Brazil, Spiders, so S&P 500. So Gold Trust, GLD. But you see what he's holding? Now let's look at the value from a value angle. His biggest value one is emerging markets as well. And then S&P 500, emerging markets. What is this one? Oh, S&P 500 and then gold. Right? Fascinating stuff. And then the bonds, right? So bonds are not looking to perform. That's pretty interesting to me. Bonds are not looking to perform, not even 1%. But yeah, any questions or comments on this? You guys seem to get like real worked up when we talk about like, global macro and monetary like policy or architecture.
It's philosophical.
It's extremely philosophical. It goes away from us talking about stocks too. But it's up to you guys. Here's another low market update right here. Search popularity rank. So this is from Crestcat Capital, and what they did was they did a Google search analysis, right? And they noticed that let's see, search popularity rank on the word recession. Last time this whole search thing was popular on Google search was in 2008. This is where we are today. See, peak Google search 1/31/2008. So it seems like from a Google search, because this is where we get all our information, right? Maybe they know. Or maybe the rest of the world feels that way too.
It's kind of a self-fulfilling prophecy.
Exactly.
It could be. It could be. But I don't think the market's going to drop easily. I think the government's going to do whatever they can to hold it up. So they're gonna destroy their own trust. Going back to gold. The government's going to destroy their own trust to hold up markets. So I think value stocks will probably go higher. Emerging markets will go higher because, well, first of all, what's the dynamic with emerging markets, right? Why are they forecasting in 7 years that emerging markets is going to be 10% up? Well, because the dollar's going to go down. The dollar's going to get devalued. This is also saying, this is communicating on the other side that the dollar's going to be cheaper, right? That they're going to do quantitative easing or whatever, because a cheaper dollar favors emerging markets. So this is why we have to start paying attention to Indian companies as well as Chinese companies. At least I think so. That's where I'm going to shift the investment thesis next, as well as commodities like uranium and stuff, and also oil, right? Lower dollar is good for oil. Now that
careful about the Chinese companies.
we'll go with Chinese A shares,
Oh.
so large cap, so
I
things
see.
like Alibaba, Tencent, where it's like it's just so big that their infrastructure to the economy, and very hard for them to just like disappear. I'm gonna go quick on the market update today. It's not much. We're kind of at all-time highs, but we're hitting some resistance. And I'm just showing you guys the technical analysis on that. Same thing with QQQ. Dow Jones again, resistance right here. IWM resistance there, and then resistance here. That's all I'm looking at. Looking at the dollar. Dollar's pretty choppy. Trying to figure out direction, but just in general, the daily is too choppy to determine anything. So I can't really interpret anything. Lower interest rates. So what happens when we get lower rates? Higher bond prices. So that's what we saw, right? A bounce in the bond prices. Everything from the 30-year to the 2-year. And then just remember that the yield curve is inverted. I'm just showing you guys this again. Looking at energy, so that was the story with the whole attack on the biggest oil facility in the world. Oil spiked about that much. The biggest in what, in the last 30 years or whatever. Could that be indication of higher oil prices to come? This is really event driven, so I don't think so.
But they recovered pretty fast.
The way it spiked up.
It's how they recovered pretty fast.
Yeah. So yeah, they could put production back in. Then I think the only thing that could really bring up oil prices now is actually lower dollar. It's more of a macro thing at this point versus like some terrorist attack. But a terrorist attack could have caused something like a repo crisis.
So, okay, what happened to the 1,000 analysts who said September was going to be the worst month of the year, like all the other Septembers in the last 15 years? And no one goes back to them and said, oh, well, hey, look how wrong you were. Because September's another record, and we're approaching record highest ever. So no matter what your data showed for the last 20 years, again, you're wrong.
Okay, so as your 1,000th analyst, right? Because I've been telling you that as well. Historically, the tendency has been a negative September, but the issue has been a lot of manipulation as well.
Yeah.
Right. So it's now for someone who doesn't follow the markets, they'd be like, "But you said this, but you said that." Well, you don't look under the hood like I do. So I think there's massive manipulation.
Yeah.
And I think it's also the governments are also cornered to a point where we just can't let the stock market drop now. Because I think if it does, their existence would go into question. At least the Federal Reserve would go into question.
But the problem is that at some point in time, even with all this manipulation, they can't predict the results.
Yeah, we can't because it's like let's say you own a home and you got like a brother who's renting out for free because he just lost a job, and you're cool with it the first, let's say, quarter, but he extends it to like 2.5 years. How much longer before you crack and you go and break down the door and get them out, right? That's the same example. It's another example is like we're constantly juicing the economy, keeping it high, but how long can the high last? If you analyze just people who take drugs themselves, right? What do drugs do to you? It gives you a high, a positive. So let's say you're 0, you're neutral. You take a drug, you go to 2, 3, 4, but later you have to return it, right? You have to return that artificial +1 to now go to -1 later. So I don't know. I personally, for me, I see like a balance in life. Like whatever you do, it just has to be in some sort of balance. Yeah.
So any insight why September tends to be so volatile and generally negative?
So if you do like a quantitative back test, which is like you overlay every year, it has that tendency to decline those months. That's what I know of it. Social wise, I don't think I don't have a confident answer from a social perspective. It could be people coming back from, bigger fund managers coming back from vacation, but I don't see how that would make a decline, right? So again, it's kind of like something I'm born into this world, and I'm asking why is the sky blue? But it's just like nature to it, right? So I came into the game knowing that this is the tendency of that month. I can't give you a better definition or answer, I feel. Metals. So I repositioned in metals pretty heavily back this week. So gold and silver. We'll see how it plays out. Did anyone consider gold and silver this week?
No,
You did? Well, I mean, are you a technical analyst? Do you look at charts, or
No.
what was your logic behind positioning this week versus like any other week?
No good reason.
Okay. No.
But it's because it had a drop after the
Okay.
bull market.
Okay.
So I think this is a good opportunity.
Yeah.
I'm not sure if we'll get a better one.
Yeah, I would like gold to go lower, but I just can't predict it going lower, right? And so I'm just going to take a position because my primary trend secular trend is to the upside. But there is a possibility it could go lower, just saying.
Sure.
So, but I like the last Friday's action, which is nice. Looking over at silver, now you notice the bias that I put on silver. Last week I drew a trend line that was really hugging this, and then now I extended the trend line down. So that might be a human bias that I express on this chart. But looking at it this way, from a candle shadow perspective, is still holding the trend line. So I moved away from the close in terms of drawing my trend line, because the last week's trend line will look like this. Right? I moved it down now to see if this will act as support. So that's just kind of how I'm moving in terms of managing the position and so forth. And in platinum's looking pretty good. This nice spike retraced to the 20-day moving average, setting up a falling wedge. Typically a falling wedge would kind of play out like this and then go higher. So platinum looks good. The way I'm viewing it is if gold goes up, everything else is going to go up, except copper. Copper is a little bit different. Copper is a different animal. All right. The other thing I want to point out as well is that it declined on lower volume. So if anything you do out there, practice recognizing this. This really helps, right? Because it escalated on high volume, meaning it was like an impulsive, like I gotta go buy it, right? Like me buying.
Conviction.
Yeah, high conviction, like me buying the jewelry this week.
Right.
And then as they sell off, it sells off in low volume.
Low conviction.
Yeah, low volume, low conviction. So this is the classic pattern right here. The classic falling wedge to a continuation to the upside. Gold miners. So this one I've been putting off like several weeks now. This one's at 55 cents, but this is one of those. I mean, if you want to trade it or invest in it, right? But I have a pretty good position on this. It's just a starter position. I bought like 5,000 shares because it's only 57 cents. I plan to go pretty big. I mean, that's like 25% of the position I want to take. So why am I interested in this? Let's take a look. So this is what the chart looks like. And this is what the bigger chart looks like at the monthly. All right, very beat down. It's a gold security. It's a microcap gold security. The thing that interests me really is the hedge fund position. So if you go into there and look at the investor relations report, you can see that John Paulson or Paulson and Company has 59 million or almost 60 million shares, 32% of the company. And this security is highly leveraged, meaning if gold goes up, I think the security could be really explosive. Now, this is all for educational purposes only. This is just one of those gold miners that I've detected, and I'm going to position my money to see if I can make a lot of money on this. We're going to go into the guru focus in a bit, but again, this is from like weeks ago where I held back, right, because we didn't have time. Some features about it, advantage of this specific company. It's called Tower Hill. Largest North American gold-only deposit by reserves and resources, not wholly owned by a major or producer. Quality asset provides long-term leverage and opportunity. Located in a stable jurisdiction with rich mining history, easy access to critical infrastructure, approved 2019 work plan to move project forward, proven local Alaska experience on the team and board. So high quality stuff. Is this the projection right here? No, peer comparison to ITH. Opportunity to invest at low valuations. Sorry guys, it's been like several weeks. So basically this is saying, this is the size of the company, is it? Market cap per ounce. I don't think that's right. $20 per ounce. Well, I don't recall, but let's just say this is the relative to the other companies that we looked at. So I like Nova Gold, Midas Gold, Seabridge I've heard of, Vista Gold I've heard of, but this is where it stands. I don't recall this chart, so I do apologize. Let's go to the next one. Meaningful potential upside to ITH share price. So this is the logic right here. So if gold prices go to 2,500, then they're anticipating $15 from 50 cents. No one's like, or anything. So we're at 1,500, but this is where we're at right now. Has anyone ever thought about how high gold will go? Anyone try to forecast?
Depends on how much they print money for inflation.
Yeah, and how much fear in the world as well. Some people are saying.
I think that's another thing, is that I think a lot of people have this idea of gold as being a hedge against inflation or against rising interest rates. But I look at gold as being like a bet against fiat.
It's more that than ever now, because just the situational decay. Hey, thanks so much, man. The situational decay of the situation.
Right. So I think when people get into that mindset that that we shared right now,
yeah,
gold will skyrocket.
Yeah.
Let's say stop seeing gold as a hedge against inflation and more as a bet against fiat.
Yeah. Yeah, I mean, cryptocurrencies is also a bet against fiat. Easier access. Well,
especially when countries enact capital controls, like China just did.
Yeah.
That run up to 20,000, that coincided when China they just started enacting capital controls.
Right.
And you had a lot of Chinese billionaires, millionaires, who were trying to get wealth out of the country.
Right. Okay, hey, fair enough, man. Especially with the Hong Kong situation as well, right? A lot of tycoons were trying to exit their net worth or their positions.
Right.
But it's are you from Hong Kong by any chance?
Oh, no.
Okay. Yeah, dude, this guy knows a lot. He's speaking monetary policy over here to me. That's pretty cool. So yeah, that's all I have for this security here. I wanted to show you the Guru Focus real quick because let's see. Current portfolio. So this is John Paulson. You guys know who John Paulson is? He shorted 2008, made $1 billion. We're gonna look at his portfolio. I have a bias towards looking at the shares just because that's who I am, but the value is relatively low. His position value for this one is, well, his biggest position is actually GLD, right? But his biggest shares position is THM. And if you feel like THM is 50 cents, you don't want to take that risk, then I think NG is a solid one because this guy's betting 21 million shares into Nova Gold Resources, right? Let's take a look at that. These are solid plays. Advance. So since November, $4 to as high as $8 at the peak, and then now a retracement. So I'm looking to position back in and just keep playing the trend up. Any questions? You want to see the biggest value real quick? And sector weightings? Okay, biggest value, GLD. Second one is drug manufacturer. Oil and gas is APC Anadarko. AU is another metal mining. But let's look at his sector weightings and see how he crafts his portfolio. The biggest weight for him is healthcare, right? And then basic materials, a big chunk. The other one is communication services. So that's how he carries his portfolio. After some point, when you guys make a lot of money, it doesn't make sense to hold a lot of real estate, right? Because you got some expenses on that. And so it makes more sense. I mean, okay, when I worked at Silicon Valley Bank, right, and I saw the venture capitalist portfolios, the very sophisticated ones. So I'll give you the statistics again. In terms of millionaires in Silicon Valley, there's like this many millionaires. Like almost everyone's like almost a millionaire. And when you escalate over to maybe 5 millionaires, it would be like about this much. And then when you get to maybe 10 to 50 millionaire, it's about this much, right? And then 100 millionaire, I only saw like 3 to 5. And then billionaires, I only saw 2. Something like that, yeah. And the way they structure their portfolios, right? Some of them, the millionaires out there, they try to build like a real estate empire, right? Buy a bunch of residential properties. But the sophisticated portfolios, I noticed that they were holding, it's everything equity. It's all shares. Shares in a certain performance-based fund, right? So shares in a hedge fund, shares in a private equity fund, shares in a venture capital fund, but that's pretty much it. That's like the end game stuff right there. So just some insight for you guys. Anyways, let's see. What do we have right here? We already talked about Bitcoin. Bitcoin's tightening up. Just want to show you this chart right here, right? And then Litecoin, I took a position as well this week, just to store money somewhere for the sake of storing money, maybe. But this week, guys, so this is really the highlight this week. This is the repo right here. This is what happened. You see that little move right there? Yeah, pretty much. So they expanded their balance sheet. What can we interpret from this? Because this is like this right here is really meaningful, and I don't want you guys to like walk away and just realize like, oh, it's just like a little blip in the downtrend right there. It's a pretty significant blip. It's a show of action to the rest of the world, because whatever they decide to do with their balance sheet, printing money, QE, and all that, it not only reflects to consumers or the audience like us, but also to like other sovereigns of the world. This is like some serious stuff, and I think it shows that they're going to do whatever it takes to hold up the stock market. So I don't know anymore. I don't know if September is going to be September like it used to be. So that's my take. But FOMC, if you read it, in light of the implications of global development for the economic outlook as well as muted inflation pressures, the committee decided to lower the target range for the federal funds rate to 1 3/4 to 2%. So that's the target now, right? Easier money. So this will act as tailwind for asset prices. So even real estate, let's say, Like, let's say if real estate's slowing down, well, I think it's just going to go sideways. It's going to keep going sideways if the slowdown continues. Because at the macro level, they're manipulating. And if you want to get real technical, look at the charts. Well, I don't think you guys want to see this, but this is what they're anticipating for 2019, 1.5 to 2%, and moving forward right there. Right? They're anticipating higher rates. And then some of their numbers. So this is actual statistics that they release. Change in real GDP, they anticipate GDP to kind of go sideways. Real GDP. And then looking at unemployment, they forecast unemployment to go up by 2021. So tightening of the system maybe. And then PCE inflation, they perceive it going sideways. And that's pretty much it. Okay, all right. So you guys seem like pretty low energy today, or how do you feel so far? What? Give me some questions or something. No?
Thoughts on the Roku demise?
It's what?
The Roku demise?
What about it?
Well, is this a company
'Cause
that's in single digits?
I like to talk about something that you guys want to hear or feel about. Well, okay, you know me on Roku. I've always felt suspicious of Roku. I didn't quite understand the business model. I think the last time we talked about it, we talked about how there's potential for acquisition because right now there's so much demand for creating content around the world with players like Disney, Hulu, and Netflix and all that, and Amazon getting into the streaming services, producing content. Is what?
Also Apple.
Also Apple, yes, Apple TV as well. So
It's
I
like TiVo though. I mean, once Comcast, who's the biggest frickin' monster, gets into any industry and makes it as easy to get to content as Comcast does, Roku is the next TiVo in the world.
yeah.
How many people have a TiVo in this room? Probably none,
Yeah.
right? So I mean, you're playing with fire if it's a company like that faces the giant who can give it away for free and bundle it with 50 other things. They're in trouble.
Yeah. So I mean, like I said, right? We looked at this business model. It was okay. Everything we talked about before this day, right here, right? It was solid. It was going up, and I was just questioning, like, I don't understand this business model. When we opened up the financials, 50% of it was hardware. The other 50% or 40% was software. I was like, okay, they're branching out into software. That makes sense. Now maybe the valuation makes sense, but still, it was just overextended in terms of pricing. So how do you defend yourself against this, or how do you spot something like this so you won't fall into the same trap as next time? Well, it grind up very solidly, like you see a parabolic move like this to the upside, right? But I think the thing that you want to pay attention to are the one-day moves like this. You see how big these moves are, right? And then you see how it tested the 20-day moving average, and then the next day it kind of just like phased down, right? So that's how you have to look at it and protect yourself. Now, judging from all this big candlesticks to the downside, this is telling me that this is going to fall really hard. It has a lot more downside. Yes, it could retrace very sharply, but the long term now, or the direction, I think, has decided to change.
Yeah.
So I was never a big fan of Roku before. I would still avoid it today. I know we talked a little bit about the whole acquisition stuff, but it's just such a competitive market landscape, and the valuation isn't there. You're buying something that is 17, okay, it was higher at one point. Let's say it was at 25 price to sales ratio, which is equivalent to true enterprise software, which this is not. This is consumer internet hardware and software. Why does it have the valuation of a true high multiplier enterprise software company?
Gross margins as well.
Yeah, gross margins nowhere near what enterprise software is, which is 70%. So I'm not surprised really for this decline. For me personally, I wish I had. This is why I'm teaching, right? I'm developing that discipline to take a short bet. I might not take all of them, but I'm going to keep trying. I think persistence is what's needed to kind of get really good at this game. I personally think this is the game that, this is where you're going to make $100 million, in my opinion. I mean, like, it's not going to be 9 to 5. Yeah.
Can we take a look at Shop?
Sure. So you guys really like the consumer internet, right? This one's highly overvalued, but I do know that it's what?
I felt like it looked even worse than Roku on many parameters.
Sure. So looking at the technicals on Shopify, right? How I kind of analyze this. You said you hate this company?
I hate this company. I hope it goes to 0.
Yeah.
I hope it does too.
So, well, okay. So judging from the chart, right, I would say I was bullish up until this candle right here. This is like the candle to tell you to get out. So I don't know how you guys will spot it next time, but it gets pretty easy if you do it with practice and you spend some hours just analyzing. See the volume right here? Right? What did you say earlier? High conviction, low conviction. So you see high volume. Yeah, exactly. So direction with high volume. Stack that with some patterns and moving averages, you have a really solid understanding of technical analysis. So what happened after the high volume decline? The next few days, it went lower, right? Went down here. So now it's testing the 100-day moving average. We want to continue to see, will it melt down just like Roku? If you go back to Roku, you see the same thing over here. Right? So at the 50-day, the next day it just melted down, broke way below. That could be the case because I'm seeing a lot of software companies decline this week.
Roku is driven by a specific event, right? Comcast gets into an industry that competes as a giant against the little guy who is potentially the next IPO.
Yeah.
So
Yeah.
that one little news item blip tanks the stock, right?
Yeah.
It's not like FedEx. FedEx goes down 50% in a year because they say their outlook is negative, even though Christmas is around the corner.
Yeah.
So one CFO says the company is going to slow down, takes out 25% of their value.
Right.
That's
right.
amazing for a company of that size.
You'd be surprised, man.
A lot of these valuations are held up by sentiment. So when sentiment changes, it can change where you guys.
Yeah, and that's what we're doing at the global level, right? And you know what's fascinating to me in here? Like a lot of people in here are like, okay, this is what surprises me. A lot of you guys in here are looking at stocks like Shopify and Roku, right? Because they're going up like crazy. But no one's really looking at like this phenomenal like opportunity in like beat down gold securities. Is it because it's like it doesn't look attractive yet? I mean, I'm getting like I'm drooling over here over the opportunity in these microcaps. But it's like we want to talk about the exciting running one. So that's my feedback from working with an audience, right? What I learned, right? The investors, this is what I'm seeing from the bigger players and what they talk about and how they position. They're positioning in all the boring ones that no one's talking about because they anticipate massive upside. Versus like when I'm in here and talking to a general crowd, we want to hear about the Facebooks, the Twilios, the MongoDBs. There's some explanation to it, but I don't know. It fascinates me that people, I guess, don't truly see the massive opportunity that I'm seeing. It's a lonely process.
Do you think hard Brexit will also have an impact on Google?
Do I think what?
Hard Brexit.
So some people are saying like, from a macro level, it's kind of tiny. Yeah, because if you look at the whole just like global slowdown, collective corporations, consumption habits, consumer habits, age demographics, it's just so much superior than like an economy with like, I forgot the numbers, but it's not as impactful. So, but it adds to it adds to structural damage.
Can you look at ISRG?
Okay, yeah. Instead of talking about things that you guys don't want to hear, I want to talk about things that you guys want to hear. But just to show you real quick what I have left, I was going to show you the Cloud 100 stocks. The top, this comes out like every year. It's the third year. I thought it was pretty interesting. We were going to look at uranium, but we already talked about it. I was going to go deep into WeWork, but it's just really explaining that it's not that great of a model. And what WeWork is really trying to do is becoming they're trying to mimic a software company through leveraging real estate leases. And what they're doing is they're just borrowing long term and then lending it in the short term, right, at a higher price. Huh?
Like a bank.
Yeah. It's fascinating. And
they say drawback is that because a lot of these people renting the space are startups, and if the economy goes down, they're gonna be the first one to go. So
yeah.
they're holding to this long-term lease on these buildings.
Yeah.
Just gonna,
Yeah, and if you analyze like the trickle down economics at the top, right? As they're printing money at the top, it trickles down, and you think of it in terms of like, okay, it trickles down into consumers buying homes, but investors think about it trickles down to, okay, which asset classes are going to outperform? Is it going to be venture capital? Is it going to be private equity? So in an environment where everything's all squeezed out and it's really hard to find upside, I'm seeing a lot of money being trickled down to the startup scene or the venture capital scene. So venture capital is getting hot, and I kind of see it now that after every huge monetary policy movement, it's going to create some huge trend, right? And I see it going into startups because so much money went into startups that these startups need to be housed. They need an office. So thus it created WeWork. It's very fascinating, but I feel like I could see how it kind of came about.
Also, what WeWork allows is it allows CFOs to trust their earnings. You know what I mean? Is instead of CFO going and telling, I have to give 20 million in 15 years, I need to have this 20 million deal. Instead of that,
Yeah.
you're going to say, hey, I just have to pay 1 million in 1 year.
Yeah.
Same space. So I saw a company which was going for IPO, and they said they had a very long-term lease in a building. They said, no, let's work to WeWork. So my earnings report and everything looks good because I'm not showing the long-term value. Right?
Yeah.
And if during recession happens and every company starts losing, what Yahoo did? Yahoo sold their building and went to Verizon building now. So they will start losing building and start getting into WeWork. There is also that slight possibility, and it's an opportunity for companies to trust their earnings using WeWork.
So before we go into ISRG, he picked up on this. So this is the traditional real estate tenant landlord model, whatever, right? So the tenants in this case, commercial real estate wise, would be like Dell, Salesforce, Facebook, whichever, intermediaries, so broker or agent, and then the landlords, right? This is the model that they're kind of focusing on. You see what they're doing? It's a bottleneck. They want to create a bottleneck so that everyone goes through them, but there's a reason for that bottleneck. We'll get you that fast internet. We'll give you like a enterprise standard type of workplace, and we're going to create a community that you can contact around the world. Your employees could have access around the world. Yes, it sounds really promising, but it's just like Bitcoin at 20,000. As promising as it sounds like, you got to control your emotions, take a step back, and understand that there's always going to be opportunities in investing. Like why go for this one right now? Just wait for it. Like there's a ton of opportunities in gold miners. Why are we going for Shopify, let's say? Not just, not trying to point you out, but that's the reality. But anyways, space products and services. So that's how they plan to make their money. And if you read the S1, it actually goes pretty deep into talking about other forms of business models that they're thinking of doing, like fitness and all that. So again, I'm just gonna go through this real quick. This is the facilities that they have around the world, right?
Is it similar to the spaces and regions?
Yeah, it is. Yeah, exactly like that. But they kind of have a lot of market share compared to them. These are the benefits that they offer, right? So again, trickle-down economics. We print money like crazy. Money flows into every asset class, the hedge funds, private equity. Everyone's squeezing for performance. So it seems like the best performance is in startups. So if we dump all the money in the startups, now the startups have a problem, which is, where do we work in an office, right? There's a reason why I throw these technology networking mixer events, because I know that one day I want to do startup investing. But you don't just invest and then it's done as a startup investor. You invest and then you help them grow. But when you help them grow, you got to think about human capital. You got to think about your operations person, your software sales person, your accounting and finance person. So me networking now with these tech mixers is to remove friction for my later investments, right? You might not see it right away, but it's a work in progress. But anyway, some of the services they provide, right? Pretty standard, right? Bike storage, craft on draft, events, global network, mail and package handling, and so forth. What else can I share from this today? The whole global platform, right? So these are the services that they kind of vision to sell on top of if they make it happen. Lifestyle, wellness, family services, food, education, insurance. Insurance really, that one really got me like, wow, really? Professional services, technology, human resources, events, and entertainment. They're really creating like a whole new way of like work and living. Like they're blending it together. At least that's their dream, right? And they're calling it space as a service, which is SaaS, but not really SaaS. Yeah, kind of funny.
It's almost like GE, how they have that random insurance business.
Now ask yourself this, okay? GE became the biggest company at one point in the world. And Apple is, at one point the biggest company in the world. When you get to that $1 trillion level or 100 billion in sales or whatever level, your market becomes very mature and you have to seek upside, right? And you'll see like these random, lateral moves to like, oh, I'm going to do insurance, financial services. Like Toyota does financial services.
You're seeking risk. search of return.
Yeah, so if you think about the recent Apple transition, right? They're primarily phones and electronic hardware, but now they're going into services. So do they view growth in services at scale? It's very hard to operate at that level. And I'm not surprised that once you get up there, it's like physics, it's like gravity.
You gotta go lateral.
Yeah, what they're trying to do against physics is that's it's like you're trying to jump off of an invisible, floor. Rocket jump, sure. So it gets hard. I mean, that's why we watch Olympics, right? We watch these people go for that extra 2 seconds or whichever. Shoot, it gets hard for me too. You guys are getting extremely smart. I'm at technical discussion number 133. And I'm thinking like, okay, what do they not know? So, but I thank you guys for coming here physically in your time, because I take that pretty seriously these days in the world. Because if you don't have money, it's all about relationships. That to me is the realest currency out there. So thank you guys. Anyways, let's see what else can I talk about without boring you guys left. This is their model right here, right? So the break-even concept. So they were to draw in like a chart and how they view it. Invest to scale the platform. So it's like any other startup, J curve, right? This is a J curve. So they're gonna go and get a bunch of long-term leases for 15 years or whichever, and then lend it out for 15 months. That's really what they're doing. And they want to do it to a point where they get so much, you're gonna take a loss because you're building a platform, right? You gotta do something for free. If you start a business today, you do a lot of free things before you catch momentum. Think of it as that way. So I want to share this with you guys for those of you who want to start a business one day, right? This is the actual realistic path. You got to do things for free in the beginning, right? Until you build up a reputation or platform, and then later you can monetize a platform, right? But the way you decide to monetize that, let's say a website or a YouTube channel, well, it's up to you. Some people like to directly advertise on their videos, or they go and get some Google sponsor or something like that. But it's this chart is like true in every business model out there. So very fascinating. And then this is the pitch as to why use WeWork, right? If you use a standard lease, you have to build out your office. So this would be the typical cost or whatever. Let's say if you don't build out, and then if you use WeWork, where they already build it out, they focus on that. So it makes a lot of sense. From a use case perspective, but I think the valuations just got way too out of control for any investor to consider for IPO. So if you're considering it for IPO, I'd be really cautious of that. I mean, do you guys know like the value that got evaporated? It went up to as high as 47 billion, and then evaporated. Let's see. Oh, right here. So SoftBank. 47 billion buy-in of WeWork, right? This is what happened to the valuation. 20 billion valuation at 47, and then talks of IPO, 15 to 20 billion valuation range. WeWork was expecting earlier this month.
There's another whole reason to this whole thing, by the way. So
Sure.
people in this room don't realize that people like myself, when I was your age, I had an office with a door. I mean, it was like 10 foot by 15 feet. I mean, massive, right? Even the last company I was with at Avaya, I had an office that was 12 foot by 18 feet. It was massive, right?
Yeah.
Now people, when you go to companies, it's literally like slavery. It's like a dungeon where this is your desk. I mean, you sit, and I don't know if any people work in a company where you sit at a desk that's basically 2 feet by 4 feet, barely have a room for anything. And so people are becoming accustomed to the fact that work is no longer, forget the office with a door, you're lucky if you've got a chair that's comfortable.
Yeah.
So I mean, it's almost to the point where that's becoming a social norm.
Yeah.
Where people now don't even expect to have a fantastic environment anymore. It's a come to the office, work where your little cell is, and WeWork can now give you property that feeds that. So I mean, you can now make it really cheap to meet the needs of your staff that have to be there.
Yeah.
And that's an increasing trend that's, I think, is really unfortunate that people here are living in a world where the work environment is so incredibly opposite end of the world of what it used to be, with open ceiling rooms and even barely cubicles even.
Yeah.
Right? I mean, no privacy, no nothing. And people even know how much it was awesome to have an office where you can close your door and there's no noise. So I mean, they're playing off the fact that that's the trend.
Yeah.
That people are willing to work and make a lot of money, even engineers in that, but not have to work in any kind of environment that's more than a desk that's 6 feet wide.
Yeah.
I mean, it's a unfortunate trend, but it's live and well, and they're playing into that.
And,
Because the thing is, you notice it, but the new generation isn't known for it
Absolutely.
because they never had it.
Yeah.
Absolutely.
Exactly.
And that's part of capitalism. because
That's right.
they
That's
maximize
late stage
their profit
capitalism.
Because real estate's so expensive. So-
Absolutely.
yeah,
So,
so
I mean, this is the reality. So-
this
Yeah.
this is the extreme reality.
Yeah.
And what you describe is what I tell everyone in here. If you don't do anything, the world's gonna move
That's
without
right.
you.
That's
The,
right.
the world's moving right now as we speak. People are shopping at the mall.
Yeah.
People are being born. People are doing huge transactions. There's deals, happening. Okay. I showed Aaron today about how I view the world, and I'm going to close it out by drawing you guys something that is just, really valuable to me. But I'm going to show you what I showed Aaron earlier, and it was this is how I view the world these days. When I wake up in the morning, it's a little fun thing just to kind of cheer you guys up on a Sunday morning. Let's see, Man of Steel Codex. So he was like, how do you, what you ask me? You're like, how do you deal with all this information or something? And I was like, well, this is how I see the world when business, the world of business, right? The first, I don't know if you guys watched this movie, but the first 30 seconds is really cool. I think some of you guys know the scene already, but let's see, let's turn up the volume right here. First 30 seconds is how I feel every day waking up, thinking about the world. Make it fun once in a while, right? But now that I know the world like so much better than I ever did before, from teaching and focusing on learning.
You don't need a second alarm.
Wait, what?
You don't need a second alarm if you wake up like that.
I don't need another arm.
Second
Oh, a second alarm. No, like I know things are moving right now, and it's super exciting. And I'm just figuring out, these are all streams of life that have to move no matter what. Meaning there are people aging and they have to behave in a certain way. How do I position myself, right? As investors. And I'm going to draw out the last thing and just show you guys why there's so much beauty in learning how to invest. Because school doesn't teach you how to invest. School doesn't teach you even how to do sales or business, right? But it's the same. It's sort of the same thing, the 3 ways to make money. But I'm gonna try and explain to you in how I see it now, right? Because what we don't take into consideration is all these externalities. You've been taught one system, but that system, as you go throughout time, will decay, like you mentioned, right? Workers today have a 2-feet desk that looks like modern slavery, according to your quote-unquote Bernard's words.
Well, sort of.
Versus what you used to have an office with a door. Economics are changing every day, like that video I was showing you guys. And I wake up ready to battle every day, let's say. Okay, so the 3 ways to make money, right? Okay. Work, investing, and business, right? And I'm gonna go a little bit deeper and explain, why. I just don't think a lot of people see it. Okay, so the 3 ways, and if I were, is this big enough? Is this dark enough? I don't know. If anything, I could draw it on the computer. Maybe I will. Okay, so, I'm gonna cancel this one out. Sorry, it's kind of dark, but this is work, and then this is business, right? And there's something called inflation. You guys saw this before, so some of you maybe. This is your wage inflation. It would be like this, right? Because you're on the worker-employee side. And then on the business side, you're exposed to, nice inflation. So like I always use the example, you own a cafe, you sell a cup of coffee for $5, they decide to print money, purchasing power changes across the economy. Now you're selling not $5 cup of coffee, you're selling $7 cup of coffee. right? But as an employee, you will always be subjected to downward pressure, right? Now, I showed you guys this before. What I didn't show you is that the investor has a chart too. There's actually a lot of beauty to being an investor that I don't think a lot of people know. And I think that's where the big money's made. I mean, this is where the fast money's made initially to get that money to invest to make even more money, right? But this is from a inflation perspective. So business, you have positive inflation for yourself. But then you got higher employees that you're going to put negative inflation, wage inflation pressures on. As an investor, you don't, over here it's work, more money equals more work, right? And over here it's work equals money, and then more work equals even more money than over here, right? But the difference is time. Well, between investing and business, right? Over here you got to put in time. So let's say you put 1 T equals $1 sign, so 2 T's equals $2 signs, right? Well, over on the business side, you put in 1 T equals a $2 sign, right? Because you are the owner of your own margins. And then you put in 2 T's, you get $4 signs, right? But the issue is that not everyone has unlimited time resources. So that's working, and then that's business, right? And then there's the last one, which is investing. Investing doesn't take time, right? You're owning shares that owns an organization that owns people who are spending their time to work for the money. So that's the beauty right there. And investing doesn't take a lot of time. You just take a position and you could benefit significantly from it. And if you understand like what we're doing here, the mechanics of investing and leveraging with sophisticated instruments, you could get augmented returns that, yeah, it's surprising. Well, if everyone knew this, it'd be a really dynamic game, right? So I don't know if this was interesting, but I wanted to share it with you guys and the reality of things and how below us is changing economics every day, and how you position yourself. You have to really think about it, because if you don't, I mean, I'm not a financial advisor, but there is a market out there for people who don't know financial investing and all that. So their services make sense, but I think judging from the crowd in here, you guys are a little bit more sophisticated, who know how to handle your money. So I'd probably get pretty serious and just like figure out how to invest in any way I can. Anyways, we're at the 2-hour mark, and again, I don't want to bore you guys, but I always want to keep the discussion interesting and dynamic and beneficial for everyone. But I think I'm going to call it here, if that's okay with you guys. Now, you could hang around chit chat, but we're still going to talk stocks. So I got to show you ISRG. So, say again? Oh, I thought you made a comment. Okay, so if you guys still want to stay. So ISRG, this one is a very popular one. It's 61 billion in market cap. It is pretty overvalued in terms of earnings. If you think about the earnings right now, everything's about at 2025, right? And the price to book's about 8 times. And I'm getting pretty lazy today because I look at the multiples, but it already tells me what the balance sheet and income statement looks like. Not a great practice for a beginner. As a beginner, I would advise around reading the statements, understanding the statements. But I like the solid trend in EPS as well as sales. But it doesn't seem like it's enough to propel this big ship. This is a giant ship to the upside. And so there's a lot of volatility, but this is also telling me that it's not really going to go anywhere anytime soon. So depending on your positioning, right? If you're actively trading, I think it's a great environment, because looking at the daily chart, there's a lot of moves up and down. If you ask me in the next month where it wants to go, I think it wants to go slightly higher. Yeah, there is some interest. If it clears 540, I think it could go higher, and then it'll retest the 580. But longer term, I think it's going to go sideways for some time, just because this one kind of hit a wall. So, but this one is known to, what was it? This is the one where they have the little cute video where they sewed the grape, right? The robot sewed the grape. Yeah. So I mean, this is a great model, right? The other beauty is that they don't have any debt. That's great, and the margins are relatively thick. They take home 29%. This is a blue chip security. My only concern is that it's slightly overvalued, but that's what we're paying for in this market, right? The markets are not. I don't think the markets are. Sometimes the markets could be dumb, But most of the time, the markets are intelligent, and yeah, and again, going back to the appreciation of studying charts, right? Every money manager out there that knows anything that makes a move, it will reflect in the price action or in the charts. So that's why we have to look at it religiously.
Who are holding this?
Sure. Okay, you wanted to hear that one. Oh, okay, let's see. ISRG. Does anyone, quick question, does anyone like wake up thinking that way? Or is it just me? Life full of action. Let's see, ownership, trades. So I want to see the heaviest holder, Biondo Investment Advisors. Now, the other thing I want to comment as well is that I like healthcare, but I'm not a specialist in healthcare. I know we have one person in here who understands that segment pretty well, but I'm primarily software. That's my strength. If I had more time, I'll specialize in everything. Let's see. ISRG. So they have they have 61 million shares, but it's not their primary holdings. Let's see, what else can I get for you? Bender, Spence, Hudson. There's no one that I know in here. I mean, these are all funds out there, but I'm looking for a name that I know. Ron Barron, I know, but he's not holding that much. So it seems like the biggest individual holder is this guy right here. How much is he managing? 5 billion. Let's see. Koatu, current portfolio.
Notice NVIDIA over there?
You notice NVIDIA?
Yeah, in the previous slide.
Shares, ISRG. I don't see it.
I was surprised to learn that in robotic surgery, NVIDIA has a big stake also.
As in they're invested into robotics, or they're a holder of a... Oh, you're saying they're a holder of this company?
They provide technology for robotic surgery, and they make a lot of money out of that also.
Yeah.
Because I think deep learning, they have the chips for deep learning and.
Correct.
Yeah. So I want to ask you guys. Wait, let me see this question here. Yeah, I want to ask you guys. So it's been a while running this investment club, right? Everything that I've taught or talked about in this club, like, how has it made you guys feel? And you're open to answering this. This is just like closing out questions, right? How's it made you guys feel? Learn about the world, change your view on investments. Do you feel like you've been recalibrated correctly to how the world's operating, or some feedback would be nice.
I think my outlook is a little bit more mature. I think.
Yeah.
Because earlier it used to be very singly focused on just technical analysis.
Right.
I never really looked at the fundamentals. And you learn this fundamental perspective of both fundamentals and technical, and also the global perspective of how the entire economy is doing.
Yeah.
I think that kind of makes me a much stronger investor.
Yeah.
So this is my third meetup.
Sure.
I look forward to, ever since I've discovered it, I look forward to Sunday morning.
Okay.
Attending.
See, I got to keep my promise for you guys. I got to make it like better all the time. my natural state is I don't like to be like this. I definitely don't be like this. I prefer to be like this. So I want to improve myself too. So you guys really help me a lot, I'd say.
Well, I can tell you, half the tools you use I'd never heard of before, like FinViz or Guru. I've never heard of any of these.
Yeah.
So the way that you sort of piece apart, here's the stock and here's the earnings growth, which I kind of like.
Yeah.
Earnings and whatever. And then how you go back to the other tools that give you a feel for who are the people that have a position in it.
Yep.
And money goes.
Who are the private investors as well?
That's a good way to look at stocks overall.
Yeah. It's definitely not a way that anyone else looks at.
Yeah, it's a new perspective for me too.
Yeah. Do you have a comment as well? Or?
Just to share a perspective, I mean, I was always conservative investor. I just believe in real estate.
Right.
From beginning, so especially in Silicon Valley. So most of my assets in real estate.
Yeah, that makes sense. When I was at Silicon Valley Bank, it's just like the ones who were like 20 million and up, 30 million and up, they were all in like software, which was like eye-opening for me, because I always thought like, oh, you go into like commercial real estate, right? But apparently not, because I understand now. It's the growth multiplier. You can't become extremely wealthy if you're investing in an asset class that doesn't have a high growth multiplier. Like real estate, the real estate prices are really a derivative of these high growth multipliers, right? And when we say Silicon Valley is well, not in the bubble like the rest of the world, is highly defensive because there are investors here, like Ashim Chana, who's invested into Rubrik. He's from Greylock, right? But Rubrik is a top 100 cloud company. So in a way, he's relieving the stress for the for what we would have experienced. Meaning, if we didn't work as hard, or if he didn't invest as great and find the next world-class companies, then I think we would feel more pain, if that kind of makes sense. So going back to the whole, we're juicing the economy going up and up, right? Expanding the rubber band. What he's doing by creating great companies in this location, he's actually protecting the Silicon Valley by just like, negating it out, if that makes sense. I wanted to show you, because you mentioned that you're extremely conservative, right? You should see the insider ownership of ServiceNow, as well as Larry Ellison, who owns 1 billion shares of Oracle. But this is the one that we look at as well, Harry Gruner.
Right.
So this guy owns 8 million shares of ServiceNow, right? And let's see. And this is the gentleman. So to me, it's like, okay, I get it. Like, this is like, judging from the physical appearance, it's not someone that would go with 8 million shares, right? But he's going with 8 million shares. So to me, this world now, I get it now. Like, I came from the financial advisor path as well, at Morgan Stanley. What I learned is that those guys are fundraisers. Their whole objective to making money is just to raise funds. Like, hey, put 100K here, 100K here, 100K here, and then you grow to 100 million and you charge 2% a year, right? But not that many are performance chasing. So I like to, this investment club is more about the art of investing, not so much about raising funds. It's really about, becoming a better investor. It's the original reason why I started the investment club. So I want to carry it all the way through. Do you have a comment?
Yeah, I was just going to note that, it seems like a lot of fund managers out there, they started out as investment bankers, so more like client relations.
Yeah.
And so that just kind of speaks to how important it is to
Yeah.
attract funds. And it almost seems like that's a bigger emphasis in actually generating, having good analysis.
Yeah. So what you said is investment banker, right? So I'm going to give you guys a little 101 lesson on finance, just because you're so interested in this topic. Everything originates from equity research. And what are we doing here? We're doing equity research. But I stack it with like global macroeconomic research as well, right? But everything in finance originates from equity research. And equity just means ownership. If you don't own anything in the game, then you're not really making progress, right? So if you look at this chart right here, there's investment banking, right? You become an investment banker, fund manager, private equity fund manager, and what's this one? Head of research, right? So it's kind of all the same. A fund manager would manage a lot of funds and have, let's say portfolio managers who do equity research, or analysts who do equity research. Investment banking is a little bit different because there's other needs out there. There's corporations who need a trade, right? Either their own shares and they don't have a CFO, or they need to go buy another company. So what does Intel do when they need to go buy ASML?
They
Right.
phone up the investment banker.
Exactly. So the investment banker is a salesperson, a glorified salesperson that understands, pitch books and stuff like that. But they go and get deals. They're a salesperson at the end of the day. Fund
I get the
managers,
sense they're like deal makers,
they are deal makers. They are deal makers. Like, oh, you want to sell? I know a guy that wants to buy. I'll give you an example. Like, I was working on an auto shop deal. This guy wanted to sell his auto shop, and so I called the guy I know who wanted to buy an auto shop. So I was trying to make that deal. That's an example, right?
But it seems so, I don't know, it just kind of seems so different from managing a portfolio.
It's
Between being a deal
100% different. So as a fund manager, trader, investor, this is what we do all day. You be reading investment reports, looking up analytics, and just trading, and you're behind the monitor. But as an investment banker, you're client facing. So it's like, hey, I'm going to go call the 7-8 million share owner of ServiceNow, not even the CEO, but just talk equity with him. When do you plan to sell your equity? All right, or if I was like let's see, securities-backed lender, have you guys heard of that? Where I'll lend based off of your assets, which are securities. So you know how today, if you have equity in your home, you get a HELOC, a home equity line of credit. Well, there's a sophisticated group of lenders out there that hunt for people who have a lot of shares and say, hey, you have 8 million shares of ServiceNow. You need a loan off of that? We'll collateralize it off of that, right? So it's a sophisticated world of finance, but the theme really at the end of the day, everything in business comes down to networking. That's all it is. So if you could build up your network, well, you could sell whatever services to it. And I think with technology today, it makes that concept more visual and easy to see more than ever, right? We talked about how there's startup incubators, but in China there's influencer incubators. So they're paying like young Chinese people with great genetics to learn how to speak in front of a camera and influence the world, build up your platform, your network, but they'll share in profits, right? It's for your equity. So at the end of the day, the realest game of all is actually an equity game. So what we do in here is equity research, right? Because now we can talk to an investment banker and say, hey, investment banker, because I know how to read S1s, prospectuses, and all that, financials, fundamentals. Hey, investment banker, I want to buy out Twilio, right? And based off these market prices. Now, that's the whole buying the whole thing, right? But in here, we buy partial shares with the money that we make from our jobs and all that.
Yeah.
So, but everything ties back at the end of the day to equity research. The better you know equity research, in my opinion, is way more leverageable than investment banking. Though, if you know equity research really well, like Robert F. Smith, that guy's an investment banker. You know who Robert F. Smith is? So Robert F. Smith is part of Vista Equity Partners. He's the guy who sold Marketo over to Adobe and made $3 billion in 2 years. So $1.5 billion a year, right? So he's more of a private equity / investment banker, where he's buy side, meaning like you have to understand the deal process, right? I want to buy something, you want to sell something. Well, Ed's going to be our broker. He's going to be our investment banker, right? And I'm a private equity titan, let's say, Robert F. Smith, and you're ServiceNow. I want to buy you out. But negotiation-wise, I'm going to ask Ed. Right? So there's always going to be a middleman in those bigger ticket deals. Like, to me, it's I think one of the best skills that anyone could develop for yourself. Now, this is the other philosophy that I have as well. When you go out there every day, when I wake up, I focus on building a network, building knowledge, and just having fun. I'm trying to blend the two, right? Because if you build your network big enough, well, it'll take you in journeys that you've never thought. I don't know if you guys care, but this investment club started off with just 3 people at Starbucks. I remember those guys too well because they become so legendary in my mind now.
Okay, one thing I just want to compliment you on, I mean,
Sure.
One of the whole foundations of this whole meeting is about learning.
It is.
I mean, people, you never stop
What's
learning.
it say right here?
Oh, there you go.
Education for learning's sake or something like that?
I've met so many people that are well educated that have freaking crazy credit card debt.
Yep.
Like freaking amazing, like 20,000.
Yep.
And they own a house, and they don't know what a line of credit is.
Yep.
You'd be surprised. It's
You
amazing.
would be surprised when I was purposely going through every single Silicon Valley Bank account before I left, just to geek out to how rich they got or what their portfolio looked like, and to realize that there's so many PhDs, people with CFA and all that, but they fell into the 1 to 10 million bracket, right? So I realize now it's like, well, what are the 100 million guys doing? They're like hardcore equity researchers and venture capitalists and deal makers. Like they go out there and they chase deals hard, man. But they also, they study religiously as well, like Ashim Chandan, right? So that's why I put these motivational stuff up, because I think it's also, when you invest, it's also psychology as well. So you want to you make your mindset more robust.
So an area that I don't really think people learn, but they really should learn, is you mentioned being a fund manager. Well,
Me?
Everybody in this room is a fund manager.
Yeah.
They're managing their own, and they have to be a shareholder of size 1 or their wife or 2, right?
Mhm.
So I mean, the whole idea of like when you talk about Bitcoin and all these other .com crazies, right?
Yeah.
I mean, theoretically, you should sort of categorize, where is my wealth, right?
Yeah.
I don't want to put 100% of my wealth in Bitcoin because that's sort of like going to roulette and betting on red or black.
Yeah.
I mean, it could really double and you feel great, or you could lose it all too.
Yeah. Yeah.
So I mean, it's a question of, where do I put, well, maybe I put 2% of my net worth into that kind of investment.
Yeah.
And I put 25% of my investment in McDonald's and Boeing,
So I want to add on top of that. What I realize now, looking at these billion-dollar funds and the secret to how they manage it, it's so simple that it surprises me. Okay, I have 100 billion.
Right.
My max position, 2 billion.
Exactly.
That's all they do. Like, you're never gonna lose, because if I lose 1 all the way, it's just 98. I have 98%.
Exactly right.
That's
exactly
all
right.
they do. So you just need to build. So the first million is the hardest, right? After you get the first million, start investing 2%, 2%, 2%, 2%, and that 2% turning into 100% or whatever. and just
So,
keep
like,
doing
you
that.
mentioned
That's how they get like.
So you mentioned Cloudera,
Yeah.
which I bought, by the way, not a huge one, but like.
Want to add this as well? Sorry, but now 2%, 2%, 2% is a strategy, right? So you got like 50 positions. But sometimes the very respectable money managers like George Soros or Stanley Druckenmiller, they'll go up to 20% position.
Right.
That is when it's like you are, to me, you're a world-class thinker. Like you have a world-class mindset to go with such high conviction on your portfolio. Man, those are the guys I truly respect, right?
So
But
you could put
Cloudera,
a
yeah.
certain percentage in, let's say, a Cloudera. There's 100 Clouderas out there.
Yeah.
These are ones that are just growing like crazy.
Yeah.
And even if you get it wrong, let's say you own a Roku and the frickin' thing tanks 25% a day. Okay, so you have 20 of them. One of them goes to the frickin' ground.
Yeah.
The other 19 are doing twice what the overall market average is.
Yeah.
So generally, instead of having, you know, a 5% return, you're getting like a 15% return over that year. And you should feel amazing about that.
Yep.
Because you're doing better than what someone at Morgan Stanley, who you'd be paying for, to do.
Yeah.
I
So.
mean, I think that's
but-
what people in the room would benefit from.
But you see, like, not everyone in here has a finance degree, and not everyone in here kind of, when you come out into the real world, right? Like, well, after teaching for so long, you don't know what's reality anymore, or what's philosophy. Like, the financial industry is so big because 90% of people, I'd say, don't have a good grip on managing their money, and so it originated this industry of financial advisors.
Right.
And so those guys are really just fundraisers. I've
And also
I've
the-
hung out with them. I've had lunch with them. I see how they act. You know, they only care about raising the funds at the end of the day. I mean, some of them will emotionally care, but how many of them chase performance?
Right.
That's the question. They're not performers, in my opinion. They're just fundraisers.
Right.
Like I would hire them if I was a hedge fund manager that's seeking performance, seeking alpha. I hire those guys because they know how to raise funds. Yeah.
Well, the point I'm making, I think people in this room should really take a step back and think about, you know, how much do I really understand what my overall portfolio is? What risk am I really incurring?
Yeah.
Because risk pays off, right?
Yeah.
You have high risk, high return.
Yeah.
But I think everyone should sort of take a step back and say, you know, what risk can I afford? If I'm working, I can afford a lot of risk. If I'm not working, then I can't, and so on and so on.
Yep.
And then how do you say, well, of my portfolio, I should have, you know, speculation in Bitcoin, that's 5%, and 50%, and gold you mentioned. Gold is actually a reverse of the economy tanking, gold and silver goes up.
Yeah.
So maybe I should put 20% of that.
Yeah.
And then, you know, mature companies, the McDonald's and the Costco's and the Targets and the whatever, they're all doing incredibly
Yeah.
well. So I'll put 30% of my wealth in that.
Yep.
And then you get, you know, utilities, which are doing amazing, high-paying, dividend-paying stocks that are doing unbelievable,
Yep.
are also up 50%. Amazing. Put 30% of that. Now I've got my fund money
Yeah.
in Bitcoin, which if it goes up, great. If it goes down, who cares?
Yeah.
But I mean, you know, now I don't go to bed worrying if my whole portfolio is gonna frickin' die.
Agreed.
I mean, I go up thinking, wow, I guessed right on 18 of them,
Yeah.
and I got it wrong on 2 of them,
Yeah.
but I still feel good.
Yeah.
I think
No,
that's what
I-
people should really do.
I agree, and when you have high conviction, someone like Larry Ellison with 1 billion shares, this is this is a portfolio sample right here.
Yeah, unbelievable.
Right?
Yeah.
This guy is unbelievable, and I always thought like, they modeled Iron. This guy's like Iron Man, but they actually modeled Iron Man after this guy.
Funny.
Isn't that interesting?
Yeah.
Yeah, 1 billion shares. So now that I'm mature as an investor, right? More than ever, I'm looking for the guys who have high conviction, because I'm not looking for those 2% bettors. Oh, you're a 2% better? I already know you're kind of like just you're chilling. You made your money. You're not trying to perform, right? But Stanley Druckenmiller, with his age, he's still trying to perform.
Right.
That to me is impressive. So I tie that back to real life as well. When I talk to people, like I constantly put in effort, right? And so when I'm hanging out in a social circle, and I have friends who are like, like sometimes you hang out so long, their effort kind of decays. So it's like, maybe we should go do something else, man. But now more than ever, when that I don't value money as much anymore, I focus on like human effort, and I just want to chase and support anyone that has high human effort.
Excellent.
You know what I mean? Like it's
They just
really
have this drive. They just keep going.
Yeah,
You know?
yeah,
Even
so-
though he's got all the money in the world.
Yeah.
Like more
Yeah.
money, like doesn't even change his life now.
Exactly.
He's still going.
Exactly. So I've come to that conclusion about myself or about the world. I have this deepest appreciation for people who have drive.
Yeah.
Yeah, and because in return it kind of makes me want to have drive, and I want to invest in them or invest my time, invest my emotions with people and stuff. I don't know if that's passion, but it's just like a type of thinking these days.
Something you're doing if you got paid nothing.
That's what I'm saying, man. Like this is what I would do even if I was a billionaire. Like I don't know what the hell else I would do. So I thank you guys for coming and listening to me every Sunday. P. Shang left, as you guys know. I was like, hey, thanks for dealing with me for 2 years, P. Shang. but yeah, I'd say okay. Last comment before we close out. Whatever you guys do, just go out there and figure out what would you do for free, persistently. And I think that's how you figure yourself out. And I have to thank the world for this investment club, because it taught me like how to be a better person, I say, or like humanity, human value, and all that. Yeah, man. Figure out what it is that you do for free and go test yourself.
Absolutely. Thanks for bringing all these great minds together.
Hey, no, thank you guys for coming. Oh shit, all right. Yeah.
I feel like you're almost like a pastor.
This is not church, man. It's a real estate office. So, but yeah, I mean that's how I feel about the world sometimes. Because you weren't here before, but I was saying that money is not really nature. Money is like a social engineered product that we use.
I think it is. That's like we're trying to.
Yeah, shoot me a text and we'll have your name and my phone number's on here.
You big executive back in the day?
Not a big executive.
Oh, you're good.
That's
Oh, nice to meet you. Yeah, I like to meet people in person. So like, sure.
I mean, now it's the worst I've ever seen. People that are highly paid, that have like, this would be a lot of big space. It's amazing.
Like trading the
When I
options,
first moved here, I
hold
had
options,
people that was
ETF
about
options, so how long it should
whatever, but I think it's like all this size.
The duration is always dependent on
And now they're going
yourself.
sit down at, right?
I mean, for me, I'll show you one of my accounts.
Where people
Like
about
it's
like that. It's like the
Did I show you this or? Okay, so this is one of my accounts, right? This is my 8 months. My 1 year was about 15. So I manage other people's money too. But when you ask me about duration, I have anywhere from 20, 20, 20. So my IG is 21. My silver is 30. Yeah, so I have like 30 calls.
Yeah, GDX and BTG is 2020. So
Yeah, I have some. Yeah, I mean this is like my slow account.
So mostly all are in 2020 or 2021.
Yeah.
How do you decide about
Yeah, I was going to go with that.
how do you decide direction like 2020 or 2021? It's like very uncertain.
One is my laziness. So if I feel lazy to actively manage it, then I would go with the bigger ones. But when it gets very active, like momentum kicks in, then I go with the shorter contracts to trade. Yeah, so it's very dependent on what you're trying to do. That's why it helps to have separate accounts. One for like investing, one for trading, and so forth. Yeah, you know, you're welcome. So the fruits are hard.